All right. Good morning, ladies and gentlemen. Quick sound check. Everybody hear me okay? Awesome. Welcome to the education room, guys. Yeah, Cav, I appreciate the cheerleading. Let's get people posting in here. Um, I know that I have some new faces today, so guys, I'm going to drag it just a little bit because I don't want to start before 9. Um, there is a YouTube video being recorded. Hey, Gerard, nice to see you. And then Jonathan, we got you back. I like it. Malcolm, good to see you. Who else is in here that's brand new? Guys, I know I get a lot of new faces today. I'm really excited about this. And I want to start with something like this. One of the things that I talk about with my brother a lot is how do we do it better? How do we do it better? How do we make it easier? How do we get you guys to be able to pull things and turn them into trades? Um, so just fair warning, guys. Day 1, 2, and 3 is very much like this guy right here, taking a drink from a fire hose. So if it's day 1 and you're not the most proficient day trader yet, I want you to be okay with that. If you're a little confused, I want you to be okay with that. If you're full of questions, I want you to embrace that, and I want you to put those questions in the room. Everything that I do in this room is a process. Everything that I do in this room takes something and turns it into something more, guys. It's very much a marathon, not a sprint. And everything that we do revolves around advantages, which I think is one of the most wonderful things in the world. It's finding patterns that repeat themselves, patterns that can be proven through study to win more than they lose, and then taking that statistical advantage and turning it into a trade. That's all we do. Um, we start with simplicity, and then you guys will grow from that. It's the easiest way to say it. So before I do anything, and that is next week. Let me go to this week. Before I do anything, every morning, guys, I pour a cup of coffee. My charts start loading. I get excited about the day, and I check news and I look to see what's going on. And it turns out that today is Wednesday. Today's Thursday. Today is Thursday. Um, Thursday, May 9th, guys. We're almost through the week already. At 8:30 a.m., we had unemployment claims. And you will notice that it had a red box next to it, which meant that it was high impact news. High impact news. Morning, Rob. High impact news can move the market, can basically make it jump, spike, bump, all these different things that we don't want it to do. So when I see high impact, when I see medium impact next to a release, what it tells me is that somebody with more money than me might have an emotional response. Somebody with the power to move the market may move the market in response to that. And one of the first advantages that I give myself every day is understanding where these high impact newses are happening. Newses, I don't think that's a word. And then I choose to avoid them. I choose to just go toast a bagel or fry an egg or do anything other than jump in front of that emotional freight train. Ladies and gentlemen, everything that I talk about today will come from the Nexgen user guide, the education page. There's 2 sections. And because I have so many new people, guys, we're going to drag out our first hour. Hell, we may drag it out 2 hours just to do it. So I'm going to go slow, and I'm going to be very methodical, and I'm going to be as thorough as I know how to be. We're going to look at the software user guide and instructions. Gentlemen, instructions is a word that means this is how you do something. I had to have my wife explain that to me the other day. But if you're new to NinjaTrader, if you've never used this platform before, this is going to talk about all the things that you can do with it, that you need to do with it, how to open up, how to close it, how to save workspaces, how to build charts, how to put in stops and targets. Good morning, Erla. Um, how to clean it out, give it a little rotor-rootering and set up with all new stuff. All of this is available right here in the user guide, guys. That's your NinjaTrader how-to. That's my I need answers about this platform. Where do I find them? The other section is the tutorial section, and this is where all the answers are. This is where all the rules are. This is where all the advantages are. And this is where I pull all the materials that I teach come from this area. There's no secrets with Nexgen. Absolutely. Rob, that was on my plan, so thank you for the reminder. Um, I say it a lot, and I say it 100% honestly, guys. There are no secrets with Nexgen. We don't try to pull you in and then give you a little and make you pay for more. We don't give you incomplete thoughts, or we try not to anyway. But one of the things that I do in this classroom is I try to keep it simple. So just because I say let's focus on a high probability trend trade, it doesn't mean that that's the only trade to take. It means that this is your best chance of success as a brand new user. Because the high probability trend trade that we are about to discuss for the next hour is a trade that, when you follow the rules, typically wins 70 to 80% of the time. One of my favorite phrases is confidence comes from the memory of success. And this is a trade that's designed to offer you success more often than failure. Wins more often than losses. I hate the word failure because I think if you're following a plan, failure is just a byproduct of doing wonderful things. The high probability trend trade, most importantly, is going to teach you to read your indicators. And that's all it is, guys, is we've all stumbled into this outstanding tool that is the Nexgen software. And we have to learn to take the information that it gives us and turn it into something. And we do that with chart reading. And chart reading will be about 90% of your day every day. Chart reading will be sitting on your hands and doing absolutely nothing, waiting for advantages to come into play, because every time I pull the trigger because the rules are met, because I can see a pattern that offers a statistical advantage. Morning, I see Travis jumped in too. Good to have you here. Troy, got you back. I like it. Um, when you're a chart reader, this is what opens the door for those next level trades. This is what sets you up to be able to take those trades that you see other people taking. You'll see me post trades in the room that are not high probability trend trades, but I've got 3.5 years reading indicators, and I see patterns a little more readily than the new user will. But once you really focus on the chart reading, and once you become proficient at it, and it's my opinion, and my opinion means very little. It's my opinion that the average human being can become a proficient chart reader within 30 days if they allow it to be simple, if they allow it to be focused. And once you are a chart reader, the cool thing is you're going to understand where the market is likely to continue, and you will find these continuation points for entries, whether it's the high probability trend trade, momentum trades, whatever. You will understand where the market is likely to go. This is going to allow you to have profit targets in the right spot, and you're going to understand where the market is likely to stop. And this is one of the most key points that you can understand, because likely to stop areas are what we call termination conditions. And all it is this giant waving red flag that says, hey, no more trades into this area. This area might stop the market. And it really is that simple. Notice the word likely is always there. Guys, all we're doing is trading patterns that provide a statistical advantage, which means that just because something is likely to stop the market doesn't mean that it's obligated to stop the market. Just because an area is likely to continue doesn't mean that it's obligated to continue. So make sure that you're not judging your plan on one trade. Guys, these are samples. If you take 100 pictures of the exact same look, you should be able to prove to yourself that it wins more than it loses. And that's what we call a statistical advantage. And that's what we trade here at Nexgen. So we're going to take these likely to stop areas and understand when not to trade. But the cool thing is we'll take those exact same likely to stop areas, and if they reverse the market, this is going to set you up for the most consistent, highest probability, best of the best, nothing but warm fuzzies trend trade. When the market is reversed at a very key area, when everything goes the other direction, guys, this is the precursor for the highest probability trades that you can take. Really, any trades coming off of these key areas have a higher chance of winning. So we're going to focus a lot on those three very simple concepts. We're going to talk about them in great depth, and we are going to focus on a trade that only has three rules, guys. We're going to talk about a high probability trend trade first. We're going to talk about a trade that offers you that confidence through the memory of success. And new users, you're going to be bored with a high probability trend trade because it takes a little bit sometimes for it to set up. But it's only three rules. And these three rules are the foundation for everything that you'll do with your career with Nexgen. The first two rules are going to pay huge dividends in your trading career if you understand them and embrace them. So the first rule says that we must have strong trigger lines. Strong trigger lines is going to give us the advantage of momentum. And guys, don't worry, I'm going to go through each of these rules in depth. The second rule says no termination conditions. None of those likely to stop areas are present. And that's going to give you a clear path to your targets. And I'm going to tell you guys right now that with momentum and a clear path, there are about 1,000 different opportunities to take advantage of the market. With momentum and a clear path, there's very little that you can't do and find a high success rate. And then entry area. We're going to talk about the entry area for the high probability trend trade, but what you will find is that if you couple momentum and a clear path, there's going to be a lot more entries than just the high probability trend trades. There's going to be opportunities to take advantage of moves, and you'll get to that point if you learn how to keep it simple first. So we're going to focus on three rules, guys. Three rules, three advantages, create a trade. These three rules will happen on only two charts. There will be a large chart and a small chart. The large chart's a broad stroke of a brush. The large chart is a slow-moving train, if you will. You can use the most current bar on the large chart and understand three things. You're going to understand the direction of the market. So here's your first lesson, new users. If the background on your large chart is green, the market's going up, and your highest chance of success comes from trading with that direction, going with the flow. If the background on your large chart is red behind that most current bar, the market's going down, and your highest chance of success will come from looking for opportunities for rules to be met to trade with that direction. The large chart will define momentum through rule number one. Very clear pattern. You'll have this down by the end of the day. And it will also define the areas that may be problematic. It'll define those areas that may stop the market. And that's rule number two, making sure that you have room to profit targets, making sure that you have a clear path. Once you have your first two rules met, and guys, I'm telling you right now, let the first two be met, you're going to turn your attention to a smaller, faster chart. And this is a refinement chart. What happens inside of one bar on the large chart, giving you direction, momentum, and areas, will be broken down into sometimes 15 to 30 bars on a smaller, faster chart. It's very much like taking an x-ray of that one bar and seeing the motion within it. This is going to refine the broad stroke of a brush. This is going to pinpoint with amazing precision where the market is most likely to continue. And by using rule number three for entry on a smaller, faster chart, you guys will be able to reduce your risk dramatically. And you'll also be able to increase your profit potential because you're going to increase the distance between your entry and the potential target. So there's only two charts for the brand new user. There's only three rules for the brand new user. And then this is your foundation. This is what you grow from. And then I'm going to share this, and I share this every morning. And I'm going to drop this one in the room today because I have a lot of new faces. There is a very clear path to getting where you want to be ASAP. This is a path that has been proven for decades. This is a path that has been embraced by some and fought by others. This is a path that I have both embraced and fought. And I can tell you that my results improved when I embraced it. And it begins with posting your trades in class. Every time you take a trade, post it in the classroom. Every time you look at your chart and you're unsure about something, take a picture and post it in the classroom. And I'm going to show you how to do that right now. So this is two charts. This is the NASDAQ. This is really not the chart that anybody wants to start on. So let's go to a tamer market. The NASDAQ is advanced. This is crude oil, guys. Crude oil is the crude futures. We can make money going up or down as long as we're recognizing patterns. So when I need to take a picture, capture software, every one of you got this when you downloaded your software. It's in there. If you go in your search bar and you click capture or TechSmith, it's going to bring this up for you guys. This is how you and I have a conversation. Everything that we do is two charts, so it's imperative that you give me both charts. I'm going to click this big red button that says capture, And this is a click and drag tool. So I need to go to the very top left of my monitor to that large screen or that large chart. And I'm going to hold down my left mouse button. And I'm going to drag it all the way down to the bottom right. And one of the things that's so important is I want to be able to see your timestamps and I want to be able to see your price bars because we are going to kind of piece these things together. So once I release, Capture Software is going to ask me, hey, Mark, do you want to take a picture? Do you want to capture a video? What do you want to do? Well, guys, I want to capture an image. So once I click Capture an Image, it's going to give me what we call the image preview. Thank you, Chris. The image preview is just the snapshot of what you just showed me, of what you just took the picture of. You can see all the price bars, you can see the timestamps, you can see the actual prices, and then there's tools at the top. Color-wise, make sure that it's legible. I love white. Even gold works pretty well with capture. Maybe avoid using black or something, but there's an arrow function. And if I click on the arrow function, once again, this is click and drag. If I left click on my mouse and drag it down, you'll see that that arrow follows my mouse until I release. There's a shape function that does the same thing. Maybe I want to make a small shape. Maybe I want you to look at everything, right? So there's a small shape. And then there's the call out button. And this is the most important thing that you can use, guys. This call out button, once again, click and drag. I can make a tiny little text box or I can make a great big text box. Make sure that you don't hide your information behind the text box. This is where you will tell me why. And that's the easiest way to say it. Why did you take the trade? Why did you enter? What were you looking at that made you feel like you needed to go long or short? So what you're doing is you're telling me your read. Mark, this is how I read the indicators. I read this as momentum. I read this as a termination. I read this as a strong top or bottom. And then what this does is this opens the door for conversation. This is where you and I, through you telling me what your chart read is, we can go through and we can discuss it and we can see if you're accurate. We can see if there was a problem. Maybe you took a trade and you were saying to yourself, man, I can't believe I lost this trade. I thought I had everything right. This is the one that's supposed to win more than it loses. A lot of the times we'll come in and we'll fix something. We'll say, oh, you thought you had a clear path, but you didn't. And that's where the challenge came in. And let me show you how to recognize whether or not the clear path is there. Let me show you how to incorporate that into your trading plan to help increase your success. So every time you take a picture, annotate it. Tell me what you're thinking, what you're seeing, what you're doing, and then just come down here and click copy. When you click copy, it's going to put this picture on your clipboard. Come over to the chat box and just paste it in there. If you are in the pop-out version, you're going to have to hit Control V to paste. If you are not in the pop-out version, you can just right-click and paste like you would anything else. But once you drop that picture into the room, when we're done with the first hour, when we're done with talking rules, I start back at the top of the chat box and we go through everybody's pictures and we talk about everything that's posted and we revolve back to those advantages. And you get feedback, 15 hours live every week. You get feedback on everything that you post in the room, every question that you have. So there is no, hey, here's a video, good luck on becoming a trader. There is 100% interactive. Tell me what you're doing. Tell me why you're doing it. And let's talk about how maybe we can do it better. After you post in the room, I want you to come down and click the upload button. And the upload button is going to take that picture and it's going to put it into the screencast cloud. And once it's there, it's saved forever. You can always come back to it. Life is good. And I want you to copy that link. Some of you will drop that link into the room. And it's just another path to taking a look at that picture. But what I really want you to do with it is the second half of becoming a confident trader ASAP. And that's using the spreadsheet that Nexgen provided you. So Nexgen gave you this spreadsheet. And I'm going to give you mine right now. So for those of you that don't have my spreadsheet, for those of you that just want the updated version from yesterday, I update this almost every day with smart stuff from the classroom. This is... The first tab is your trade journal. So if that picture that we just took were a trade, I would right click and I would drop that, and I would just drop that that link right into the room. See that it says app.screencast.com. There's letters, there's numbers. This is one way that you can do this. And you can come back and hold down control and click on it and it'll go to the picture. But there's a more streamlined, prettier way to do it. Once I have that in the box, I want to click the Insert tab. And that's going to change everything up top here. And then I want to click the link button. And once I click the link button, it's going to allow me to create a hyperlink. So Cindy, I was looking at your spreadsheet yesterday. You could do this where you paste that address, that screencast address into the address bar. And then up here under text to display, I can put short trade winner. You don't have to. My spreadsheet looked just like yours for months. And then once you click OK, it gives you that link. It's easier to follow that link, and it brings you right to the picture that we were just talking about. And this is really the first thing that you're going to do. Every trade that you take, guys, and it's imperative that you're taking trades on simulator, that you're trying things, that you're breaking things, that you're getting questions. You're going to come back every morning, and you're going to study that page, and you're going to say to yourself, all right, this is what I did yesterday. What worked, right? Did following my rules work? Did it provide more winners than losers? And you're also going to ask yourself what didn't work. And you're going to be able to set yourself up for the day, set yourself up for success. Maybe you're like me and you love to trade in determination conditions. You're going to recognize that pattern by coming back and studying the spreadsheet. Guys, I'm going to recognize your patterns every time you post in the room. And I'm going to tell you right now, sometimes it's going to aggravate you because you're not going to know that it's your pattern. But if you have a tendency to break a certain rule and I see you losing from it, we're going to talk about it. And we're going to say, hey, let's talk about how to avoid it. Let's make it better. But this brief historical study every morning, guys, it's going to prepare you for the day. It will accelerate the learning process. So I want you to get in the habit right now. If you're brand new, drop a picture in the room. It doesn't have to be anything. It doesn't have to be a trade or a chart read. Just let me know that you can do it. And if you need a little help with it, say, hey, Mark, give me a little help with that one. It's important to me that I get the most out of this classroom. It's important to me that I take advantage of all that feedback. And let it be important to you guys. Be greedy with the time in the room. Be greedy with the having someone here to give you feedback. And let me go to my library real quick because we made a little cheat sheet on that. And I'm going to give you guys the cheat sheet here. Exactly how to go through and use that spreadsheet, how to go through and post it in and get that hyperlink and all that good stuff. So those are in the room for you right now. And then once you start to build this habit from day one, what happens is every day you find that you are your biggest critic. You are your own policeman. You're the one that's annotating your charts, that's talking about these things. And you begin to lose the need to say, was this a good trade? And you can say, oh my gosh, I just annotated my charts with my rules and I broke this rule, and let me work on fixing that. We'll work on it together as well. We're going to spend the first hour and we're going to talk about the trigger line and the Fibonacci rules for when it's okay to trade for the high probability trend trade. That trade that typically wins 70 to 80% of the time. That trade that creates confidence through the memory of success. That trade that teaches you to read your indicators, guys. Your chart reading is what opens doors. I want you guys simulating, even on day one. Simulate, practice, get comfortable with the mechanics of NinjaTrader, getting in, getting out, setting targets. Moving stops. But the idea is once you start to get past that let me get through the mechanics stage, practicing the correct rules, posting pictures in the room and making sure that you're trading with advantages and not against disadvantages. One of the challenges that a lot of new traders have is they love being simulator rich. They try to trade 100 lots and take lucky trades. But your brain doesn't understand the difference between simulator and live. So everything that you do on simulator will translate into your live trading. And what feels good in the moment, that short-term success, breaking rules, getting lucky, it typically sets you up for more of a long-term failure because that luck runs out when you go live. We're going to simplify this morning. We're going to talk about two trades. We're going to talk about a high probability trend trade. And then we're also going to open the door for a medium probability trade through our ability to read charts. And I'm going to go back to the glossary of common terms. And I want to introduce you just to the definition. So a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. And it's really pretty important to remember that issue is singular. The more issues you have, the less likely you are to be successful. So a small issue exists. Your ability to read your charts, to understand your indicators, will identify that issue. And I'm going to define it clearly for you initially. This is going to be the vast majority of your trades. What you're going to find is that most of your trades are not going to be perfect, which means that you will have to manage them assertively. If there's trouble in your way, you're going to be able to identify that. You're going to be able to take profits there. You're going to be able to get to a zero loss level ASAP. And guys, medium probability trades are going to be the bulk of what you do, but your ability to take those will be hindered dramatically if you don't understand the very simple concepts of the high probability trend trades. So we're going to focus on two, and your job, guys, is to learn the looks so they become easy. And this is where we go back to the spreadsheet. The fourth tab is the client trades. Client trades, guys. I've got the entry for the high probability trend trade short, entry for the high probability trend trade long, a very mechanical plan for beginners, for management. I have about 300 pictures of Nexgen users taking the software, finding the advantages, entering trades, exiting trades. Most of these are annotated. There's a whole section dedicated to patterns that repeat themselves on the market. And you'll see this a lot, guys. As you begin to focus on the information that your charts are giving you, you'll be like, wait a minute, I've seen this before. Hold on, I've seen this before. And you'll begin to recognize expectations through these patterns. And it's pretty cool when that clicks because it feels good. There's a whole section dedicated to those likely to stop areas so that you don't find yourself trading into them. And then a management. A lot of things to help you grow a management plan as a new user, a lot of patterns that repeat themselves, a lot of reasons to hold, and a lot of reasons to exit. So your goal as the new user is to turn this favorite look section, this is your section, into the one that looks like mine. Filling it out with management from the trades that you take. When your rules are met, making sure that you understand the look, dropping it in here. When you begin to recognize patterns, yesterday we had somebody talking a lot about what we call the gap theory, and we'll cover that today. And she told me that's going to be my study focus. So when I see her spreadsheet in a week or two, I want to see 50 pictures of the gap theory. I want her to be an expert on that. I want her to teach a class for me. And then the same thing with terminations, guys. If terminations are your weak point, go take pictures of them over and over. You'll be amazed at how often they stop the market. And then finally, those three advantages that create a high probability trend trade, I've given you the 101 section, guys. And the green section is strong triggers, rule number one. The green section here is a clear path, rule number two. And then finally, the entries, rule number three. And what you're doing is you're going to go back and you're going to take 25 pictures of each of these sections. But what that does for you is it makes it easy to recognize. By taking pictures of the market when the market isn't moving, it's easy to recognize these things when the market is moving. So once again, brand new users, it's a lot coming at you on day one. It is easier to understand if you let it be three individual pieces that create a trade and focus on learning each individual part before you go on to the next. Post in the room everything you see, everything you think, everything you wonder. Just post in the room. Don't worry about interrupting me. I keep eyes on the chat box. So as we go to talking about the rules, if you have a question about momentum while we're discussing momentum, just drop it in the room and say, hey, Mark, question on momentum. And I'll address it before I ever go to rule number two on termination conditions. And then if we have questions on termination conditions, I'll address it before we go to entries. And if you have a question on entries and we're talking about momentum, I'm going to politely say, hey, let's go through momentum in a clear path before we answer these entry questions. So we're going to focus on rule number one, guys. Rule number one says large chart must have strong trigger lines. Pretty easy concept. If the background is green on the large chart, it's going up. The only way that I could ever have strong triggers is if both my small triggers, these solid lines, and these large triggers, the dashed lines, are both green. The colors need to match. For those of you that are engineers, welcome to the room. You're wondering, well, what are these triggers and how are they made and what's the mathematics that create them? I need a spreadsheet for this. You don't. You don't have to know how to build a watch to tell time, guys. Small triggers are a fast-moving average. Large triggers are a slow-moving average. They work together to identify momentum. When the small triggers, the solid lines, have broken above the large triggers, the dashed lines, the space between the two, I want you to picture scissors opening. The space between the two lets me know that the odds are favorable for the market to continue up. You're going to hear odds favorable momentum in the room all day long. In a downtrend, my large triggers and my small triggers must both be red, which means right here where there's green and red, that's not momentum. They have to match, they have to be wide, they have to be angled in the direction of the market, and it's the space created between the two that lets me know that the odds are favorable for the market to go down. Guys, when you have odds favorable momentum, you're going to be able to pinpoint on a smaller, faster chart where you should be buying Fibonacci support and where you should be selling Fibonacci resistance. On your large chart, it looks like a tail or a wick. We are going to dissect this bar and you will be able to pinpoint exactly where that tail is most likely to form. The best of the best area to enter a high probability trend trade long to go with the momentum, or the best of the best area to enter a high probability trend trade short to go with that momentum. Odds favorable momentum pushes a market. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum will even cover some of the mistakes that we tend to make as new users. But odds favorable momentum is not a forever thing. When the small triggers work their way back inside of the large triggers, when those scissors close, we call this a weakening of the large triggers. And when we weaken the large triggers, anything can happen up or down. And I want you to think about that in terms of, I have $100 left. Am I going to bet it on odds favorable momentum in a market that's likely to continue up? Or am I going to bet it on an anything can happen look where I don't know if the market is going to go up or down? I don't know if it's going to retrace deeper. I don't know if it's going to get stopped right at a key Fibonacci area. So you'll see the progression all the way down. Brand new users, this is your best of the best. As you become a chart reader, when one of the lines works its way inside of the large triggers, you'll know this is momentum slowing. You'll say to yourself, my advantage of momentum appears to be going away. Let me make sure that all of my charts agree, and maybe I'll try one more short and I'll manage a little more aggressively. And then once we get those anything can happen triggers, you will get to a point where you're very willing to take a short trade, but your chart reading will allow you to manage very assertively if something changes. And then if those weak triggers get to Fibonacci support, Fibonacci resistance, these areas become more likely to stop the market. So let's go to the live market real quick, guys. And I want to get a why out of everybody in the room. I ask for feedback a lot because, you know, I'm insecure sometimes. Let's take a picture. And we'll use this one for our spreadsheet. So we're not even taking a trade. But let's take a look. Does everybody see? Please give me a Y in the room. Small triggers above large, all green. Space means strong. Rule 1 met. Momentum. Seems like a lot to write, doesn't it? Mark, that feels like an awful lot to write, but check it out. From this one picture, without having to take a trade, I now understand exactly what it looks like to have strong triggers to the upside. I know what has to happen. I know which rule it pertains to. And guys, I understand which advantage it's giving me. And I want you to see this. There's a tail and it continued up. And there's a tail and it continued up. Guys, this is strong triggers to the upside. And then check this out. That is a separation between the small and the large. The smaller below, everything says down. And there's a tail to the downside. Guys, all you're doing is identifying momentum. All you're doing is saying, hey, this is my best look. This is my best look. And look how it slowed and the market reversed, right? So we're creating awareness. So I'm going to share this and I'm going to go to my spreadsheet and I'm going to drop this in there and I'm going to do that whole hyperlink thing. And I'm going to say strong triggers up. And now I know what it looks like. And now I can come back and study it. And now I can make sure that I never miss strong triggers. So guys, that's the most current bar. Do you see the small triggers above the large triggers? Do you see the space between the two? Both are wide, both are angled. Guys, that is in the moment. Strong triggers. Let's draw that arrow. That is in the moment, first bar, strong triggers. And it continues up, and it's still going up with all that strength. Good morning, Zorro. So guys, it's important to me that you understand what strong triggers looks like. It's going to be imperative that you understand what it looks like when that advantage goes away. And this is the first piece of the puzzle, guys. Focus on momentum for a few minutes. Make sure that you're good at it. And then once you are, let's identify some termination conditions. Termination conditions false. Not trading into areas that may stop the market. When this happens, when this rule is true, you'll have room to your profit targets. When this rule is true, guys, you'll have the advantage of a clear path. These first two concepts are the most important concepts for new users. Understanding momentum, when it's likely to push, understanding that there's nothing in the way to stop you. And the areas on a large chart that may create problems. Guys, these are lines on the large chart. That's all you have to think about them as. Divergence high lines. It's a magenta line that prints off of a pivot if there's a loss of momentum. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, divergence low lines. It's a light blue cyan line that prints off of a pivot if there was a loss of momentum. These are the lines that can cause trouble, guys. These are the lines where the people that move the market make decisions. These are the lines where the buyers buy and the sellers sell. These are the lines where the people with more power and money than you are going to decide what happens next. And the cool thing is we can use those T3 trigger lines, those same trigger lines that establish momentum or show us that it's gone. They're going to let us know if these areas are likely to stop the market. They're going to let us know if these areas have the potential to break. And they're going to let us know if these areas are broken and we shouldn't be worried about them anymore. And the trigger lines are going to give you all that information. And it's a very simple recipe to understand when an area may stop the market. So let's talk about termination conditions first. The first thing that must happen is price reaches an area. Why does price reach an area? Because that's what sets off the decision-making process. That's what makes the sellers question whether or not they want to be in that sale anymore. That's what makes the buyers decide whether or not it's time for them to go long. So the first piece of the puzzle, guys, is let price reach the area. Let your dynamic Renko bars get to the area. In this case, it's Fibonacci support. Once it gets there, all you have to do is ask yourself, where are my trigger lines? If the trigger lines remain above support, rule number 2 isn't met. If the trigger lines remain above support, you don't have a clear path. Your job as a brand new user is to say to yourself, no more short trades. No more short trades into this area. I have to wait for the reaction. Decisions are going to be made and I don't want to get caught in the middle of it. And it may be an untradeable bounce. It might be a full reversal. And honestly, the decision that gets made might be that they just smash right through it. And that's okay. But in that moment, your highest advantage comes from doing nothing, that 90%. Well, if I can't trade into an area because the triggers remained above, when is it clear? When your small triggers and your large triggers get below support here. Support behaves as resistance. When the small triggers and the large triggers get past the area is broken. This is when your path is clear. This is when you're looking for rules to be met for that highest probability trend trade. And I want you to see something, guys. Give me a Y in the room if you recognize, whoops, wrong one, that we have odds favorable momentum. Smalls outside of the large, larger wide, angled in the direction of the trend. Does everybody see this look? Pretty cool, right? Give me a Y in the room if you notice that both the small and the large triggers are below support and now it's behaving as resistance. We're piecing these ideas together. We're turning them into a trade. When we get to rule number 3, what you're going to realize is that you have the ability to pinpoint exactly where that tail is most likely to form, and you're going to ride that wave of momentum all the way to where the market is likely to go. Guys, this becomes your entry for the highest probability trend trade, but we're going to wait for the area to break. We're going to wait for the small and the large to get below support, letting us know that our path is clear until we reach the next area. Guys, this is termination conditions 101. The recipe will never change. Price reaches, triggers above, it's a termination condition. Small and large below, the area is broken. Let's look for our rules to be met until we reach the next termination condition. This is your high probability trend trade scenario. Now I'm going to introduce you to your first medium probability trend trade scenario. Remember, we said a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. So guys, when 50% of my triggers remain above the area in question, when 50% of my triggers, hold on, that's going to be the small, just so you know, the small lead the way. And here we go, all caps, smash through the area in question with strong triggers. Remember we said that strong triggers can break areas? So with strong triggers, what this tells me is this area has the potential to break. That's all it is. It's potential. It could. It might. Meh. But not for sure. So rule number 2 isn't met. Is everybody comfortable with that? If the small smash through 50% and the large lag behind 50%, with this level of momentum, this area has the potential to break. But until the small and the large break through, it is not considered a broken area. It is not considered a clear path. And because it's not a clear path, it can't be a high probability trend trade. That's your one issue that exists, which means that you can rely on momentum. You can rely on your entry area, the other two advantages, and you will still be able to capitalize on this maybe look. So let's recap. Price reaches the area. If the triggers remain below resistance, this is a termination condition. This is just telling you, hey, sit on your hands for a second. Let's see what happens. If both the small and the large get to the other side of the area is now broken. And with that momentum, we're going to pinpoint some entries. We're going to look for our opportunities. And then if the small smash through the area, 2 to 3 points, and the large are lagging because it's a slow moving average, we are going to look at this momentum and we're going to say to ourselves, there may be an opportunity, but I will have to manage it aggressively. I will need it to be the best of the best to get me trading on a maybe. And guys, this is really it for new users. It's either broken or it's not. And this is my 90% of your day is spent reading indicators. But before I do this, can you guys give me a Y in the room? Especially my new people, help me out here because I am a worrier. If price reaches, I love this. If price reaches Fibonacci resistance and the triggers don't break, there is absolutely no reason for anybody that's taken my class to lose money, because this says it may reverse the market even with the momentum. And look at the reaction off of that key fib. Price reached a divergence high. The triggers didn't break. That was your top that set everything in motion. But that top didn't end it because it bounced right off of support. That's your fight, guys. And if you scroll back on a chart, area breaks, pulls back as support, right? Support stops the market, rifles it up. Support stops the market, continues up all the way to Fibonacci resistance. Is it just me, or is that freaking amazing that you guys know where these areas are? and you know exactly how to understand whether or not you should trade into them or whether you should be trading from them. And guys, this is what we do every day. This is what we call a chart read. Imagine how much money you could save by not going long into that area, even with momentum. How much money could you keep in the bank by not going short into support, even with the momentum? And again on long. So guys, I know that I get excited about this stuff, and I get excited about this stuff because I watch you guys avoid losers. And when you avoid losers, that's what keeps the powder dry. That's what makes it easier. So price reaches yellow 1-to-1s. No, don't go. Pump the brakes. Say to yourself, guys, I lost my advantage. I don't have a clear path. I'm okay doing absolutely nothing. I'm going to text my wife and tell her she's pretty. And then the reaction off of this termination condition is it pushes right back to resistance and all the triggers remain below. I can't go long and I can't go short. And then when it pushes back, my trigger lines don't match up. I don't have odds favorable momentum, and I still don't have a clear path, and I still don't have momentum. And then I reach this mid band and my large triggers are a full bar away. This is what we call the gap theory. That's a termination condition. And guys, this goes on for 45 minutes. For 45 minutes, you are witness to the 90% of your day doing absolutely nothing because your rules aren't met. And it's not uncommon to see you opinion formers lose $1,000, lose $1,500, lose $500, blow out your accounts, hoping, wishing, and wanting that the market will do something that your indicators aren't telling you it's likely to do. Those of you that studied, that believe in the rules, that practice the methodology said, you know what? I'll wait for that momentum to be coupled with a clear path, and then I'll pinpoint exactly where the market is most likely to continue, and I'm going to get paid with that momentum all the way up to Fibonacci freaking resistance, and that's about $450 in my pocket. We're learning patience while we learn the chart. We're learning to trust the idea that fibs, that 1-to-1s can stop the market if the triggers don't break. We're learning to trust the idea that momentum pushes. We're learning to pinpoint where the market is most likely to continue. And guys, I'm telling you right now, at this very basic foundation, there is nothing that you can't do in the market. There is limitless opportunities, but you've got to keep it simple first. So everybody, I got a lot of whys from you. Price reaches an area, no triggers, no trade. That's the easiest way to say it. Well, guys, sometimes price doesn't reach an area and it reverses. And sometimes price has odds favorable momentum and it doesn't reach the area and it reverses. I'm going to give you one more termination condition, guys. And this is the only termination condition that I will accept on a small chart. This is the only time using a smaller, faster chart. Oh, thanks, Ron. Where I will say my path isn't clear. And I'm going to use the idea of divergence. And then for you new folks, let's talk about what divergence is. Divergence from a low means that you see a negative number and a cyan line, and it'll print off to the right as long as it needs to be there. And you're going to see these all day long, and you're going to see them all over the place. Divergence is a loss of momentum. That's all it is. It means that price went down and up. We call this a pivot. And right around the third bar up, your software runs a calculation that says, hey, Travis, momentum is not following price. Malcolm, look at the cyan line. There's a loss of momentum. But guys, that's all it is. It's just a loss of momentum. Don't give it these magical powers. Oh no, there's a divergence. The market's reversing. It just means, man, momentum is dragging a little bit. Momentum's not doing what price does. And when you get 3 of these divergences in the same price range, it might terminate the trend. Guys, divergence is created on the third bar. This is not price hitting divergence. This is price creating divergence. And this is important when you talk about termination conditions. But 3 in the same price range, it may terminate the trend. 3 divergences in the same price range with weak triggers may terminate the trend, and it's a little bit stronger than just the 3 divergences. And then 3 divergences in the same price range when the final pivot is higher than the previous from a low, or lower than a previous from the high, guys, this sets you up with a head and shoulders and it becomes more powerful still. So Kenny, I'm going to use the exact same principle to define my price range initially. If I have a divergence line and the small and the large triggers don't break it, that divergence is in play. So 3 divergences in the same price range means that divergence never broke. It means that the small and the large never made it to the other side. So let's go see if we can find a small chart example of that. 3 divergences, small and large broke them. These 2 are out of play. These are not in the same range. Does that make sense? Small and large do not break them. These are in the same range. So I'm going to use the same idea. As soon as the small and large get through the same way I look at it on a large chart, then guys, I'm good. Look what your small chart did off of that termination. There's your termination. There's your termination, right? We went back and looked at these. And you can see how often everything changes. And it's kind of cool that you can do that. So this is your final termination condition, guys. This only happens on a small chart first. You will use these 3 divergences at a low or a high, and it'll help you see when the large chart can't show you change because it's such a slow-moving chart. It'll keep you out of that final trade that's doomed for failure more often than it isn't. So we're 2/3 of the way there, ladies and gentlemen. We have momentum, and momentum is outstanding, and momentum creates an advantage, and momentum can break key areas, and momentum can cover mistakes. And man, if there was one look that I don't ever want to be without, it's momentum as a brand new user. We've defined our path. We've used lines on the large chart to determine exactly where the market may stop, may break, has the potential to break, where it could reverse. And we know exactly where these areas are long before we ever get to them because, hey, we have Nexgen software. And we're going to use the trigger lines to determine where these areas on a large chart may be problematic. Well, rule number 3 is designed to take all that wonderful stuff that we just found on the 2 charts and refine it, to take that 1 bar and turn it into 20 or 30 bars to pinpoint where the market is most likely to continue. Guys, your 2 charts are 2 separate groups. The large chart is the large crowd. The large chart leads the way. The large chart shows you what all the people in charge want to have happen. The small chart relies on this small crowd, these people willing to fight everything the large crowd says. We love the small crowd. We don't want to be friends with them, but we love that they exist because these are the guys that are going to get us to our best of the best entries, and they're going to do it with a little pushback or retracement. That one little shove counter to everything the large chart says. So rule number 3 on a small chart is designed to give you the advantage of entering where the market is most likely to continue. It is the most verbose rule, guys. Rule number 3 says that we're going to use a limit order. A limit order means that you're going to be able to, through your precision, know exactly where the market is most likely to continue and wait for it to get to you rather than chasing price. You're going to use a limit order and you are going to buy or sell a pullback depending on the direction of the market. A pullback is that tiny retracement in price. And you are going to buy or sell that pullback at an area. So on the large chart, areas were problems. On the small chart, areas are where trend trades originate. Fibs, midbands, yellow 1-to-1s. That's the list. Fibs, midbands, yellow 1-to-1s on the small chart can define an entry point. But here's the most important part, guys, is those areas have to be inside of triggers. They need to be inside of those trigger lines. Every now and then I pull out the quarter words, Rob. Sorry. English lit major. So trigger lines are moving averages. And guys, I'm not a math guy. I'm going to tell you right now. I am not a math guy. I failed college algebra 4 times before they took pity on me and sent me off to the university. Trigger lines are a moving average. Price tends to correct to the moving average. On your small chart, there are 2 trigger lines. There is a large trigger, which is smooth, and there is a large trigger that is synthetic, that is stepped. This large trigger here, the stepped one, is nothing more than the large trigger from the large chart. So it is literally this trigger line superimposed onto your chart. When these two overlap, one on top of the other, when your large and your synthetic are like two snakes riding piggyback, guys, this is your best of the best look. This is the smallest correction point. We do not expect trigger lines to stop the market, guys. We don't say, oh, look, it's a moving average. What a great place to bounce. What we do say for the high probability trend trade is let's give the market something solid to bounce off of. Let's give it an area, fibs, midbands, yellow 1-to-1s, and let's shoehorn them into the tightest trigger look ever. Guys, this is your high probability trend trade entry. This is the best of the best. As the triggers move, you'll notice sometimes that they split. If you just say to yourself, the triggers are a correction point, when you see split triggers, you now have two correction points. You may have lines inside of each correction point. You may have lines hovering in between correction points. You may have lines beyond. But the wider these get apart, this is going to decrease the accuracy, the precision of your entry. So for you brand new users, I would encourage, I don't tell you what to do, I would encourage you to look for favorable large triggers. I would encourage you to embrace that. And once they start to split like this, guys, that advantage goes away. It becomes harder and harder to pinpoint where the market is most likely to continue. So here's the two charts together. The large chart says up, the background is green. The large chart has odds favorable momentum. I'm putting my little laser printer on what would be the most current bar at the time. And the large chart, the top of that bar, has not reached Fibonacci resistance. So once again, new users, work with me here and let me know if you're okay. The market says up. The momentum is advantageous. Let's keep the big words coming. And small and large have cleared resistance, and now it's behaving as support. Is everybody comfortable with this? This is your large chart read that says, let's look for an entry. And the large chart is right where my laser pointer is right now. It's all the way up there. So once it says this, we're going to look to the small chart. And we're going to let the small crowd do their thing, guys. And the small crowd does their thing with a reversal bar. A reversal bar on the small chart. A lot of shy people. I know this is when I know that it's getting a little overwhelming for you guys. So just play along. When the large chart says up, when the large chart has odds favorable, when the large chart has a clear path, I'm going to wait for a reversal bar on the small chart. This is the first step in finding my best of the best entry. I don't take a long entry on a reversal bar. The reversal bar says to me, hey, Mark, here's the beginning of the pullback. Let's find those triggers that you talk about every day. Let's look for large triggers and synthetic triggers, and let's see if we can't get them overlapping a little bit. This is the first part, guys. Wait for the reversal bar. Identify your triggers. Draw a box around them if you need to. Once you've identified your triggers, let's find the areas inside. Let's find something solid for that market to bounce off of. Fibs, midbands, yellow 1-to-1s. Once you have areas inside, you can create what we call the window of opportunity, or the woo for you Ric Flair fans. And it will extend in a long trade from the highest point of support, in this case it's a midband, to the lowest point of support. It happens to be yellow 1-to-1s. You could reverse those and it would still be the window of opportunity. I don't rank them. I don't give them more precedence. Midband to yellow 1-to-1s, guys. This black box is where the market is most likely to continue. This black box is your window of opportunity. This black box is where you know without question that you're going to take a high probability trend trade and you are going to trust your methodology to the point that you will activate a limit order at that highest point of support inside of favorable large triggers. And at this point, there's nothing left for you to do. You have assured yourself the advantage of momentum. You have assured yourself that there's nothing in the way, and you have pinpointed exactly where that market should bounce. And guys, this entry is your first 30 days with Nexgen. because it teaches you to recognize odds favorable momentum. It teaches you to understand that a clear path creates an advantage. It creates patience, waiting for a reversal bar, looking for triggers, identifying the areas within, understanding that it's not the triggers that are creating a bounce. I'm about to get there, Gerard. It's the solid, like throwing a tennis ball against a wall. And guys, you just activate a limit order. This is my yellow. And then I start to pray that the small crowd can do their thing. And if they do, I'm in a short trade at the lowest point of resistance inside of favorable large triggers. This is my entry, guys. This is the best of the best. This is where the market is most likely to continue. These are where my advantages lie. And you'll get to the point that you'll understand we don't trade the tails, we trade the pullbacks to support. At the top of the bar where the pullback starts, guys, we've got like 5 points to resistance. By buying the pullback at support inside of favorable large triggers, we've doubled our profit potential. So reversal bar, find your triggers, red box, identify your areas, limit order at the top of the window. Ignore the areas beyond the correction point. Reversal bar starts the pullback, find your triggers, identify your areas, limit order goes just below the area. These are outside, beyond the correction point. They're not a part of what we're doing. And then Gerard, once you understand where the market is most likely to continue, well, now you understand where the market shouldn't go. You know when your edge has left the building. So initial stops are placed where the market should not go, beyond that window of opportunity, typically 4 to 5 ticks, above the trigger lines, above the areas, above the window of opportunity, 4 to 5 ticks, below those triggers, below the correction point. And guys, this stop is you telling yourself, hey, you know what? If the small crowd ate their Wheaties, if the small crowd's hopped up on Red Bull, if the small crowd just took a loan from their rich uncle, they might push through. And if they do, that's as far as I'm willing to let them push, because this is where my advantage goes away. And Gerard, guess what? 2 or 3 times out of every 10, they're going to get to that stop, right? Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I want you guys to be okay with taking losses. It's a normal part of a positive equity curve. But the key is to take responsible losses. Have the advantages, put it where the market shouldn't go, and be willing to suck it up a little bit every now and then, right? Guys, you can't have nothing but winners. But the cool thing is, and I think this is cool, I hope you think it's cool, is that if I can honestly say that I had the advantage of momentum, if there was no doubt in my mind that my path was clear, and I pinpointed exactly where the market was likely to continue, I know that this one wins more than it loses because I've studied it, I've researched it, I've practiced it, I've simulated it. And more often than not, Gerard, I'm going to get a reversal bar in the direction of my trend. And once I do that, I'm going to reduce my risk even further. I'm going to put it 2 ticks above it if it's a short. I'm going to put it 2 ticks below it if it's a long. And the cool thing is that we can decrease our losses dramatically with these reversal bars. It's not uncommon to see you guys taking $40 or $50 losses as opposed to hoping and wishing and wanting and getting knocked out for 200 to 300. And the idea is that you just focus for 20 days on where the market is likely to continue. You just focus on getting in where it's most likely to continue. You focus on having the advantages and taking the entry. And guys, this is my first hour. And we're a little bit over, right? That's okay. It's the first hour every day. This is what I talk about every day, guys, because I believe in my heart of hearts that if you can look at your chart and talk to yourself in terms of advantages, if you can say to yourself, I do have momentum, my path is clear, I can identify where the market is most likely to continue, then this very simple chart read is going to take you to every other trade that you want to take. It's going to teach you to manage. It's going to do all these things once you're a chart reader. But you have to focus on the basics first. You have to make it easy first. Kenny, the safest is 4 to 5 ticks beyond the triggers, beyond the favorable large triggers. in the ideal setup, that's typically going to be 4 to 5 ticks outside of the window of opportunity as well. So for brand new users, beyond the correction point. As you begin to grow with the software a little bit, if you've got another 17 ticks to get below those triggers, maybe you put it behind the areas, because we expect the areas to create the bounce, right? We expect the areas to create the bounce. The triggers are just a correction point. So I like 4 to 5 beyond the woo. Some people will go beyond the triggers because that makes them a little more comfortable. You'll have to determine your own willingness to put the risk on there. So is everybody, I'm going to ask real quick, are we good? Are you guys good with the high probability trend trade? At least as much as you can be as a new user. I know that there's a lot of moving parts, right? There's things that you have to study, things that you have to learn. I'm going to give you the easiest way to do it. This is my chart reading 101. This is something that I came up with about a month ago to help new users get to where they want to be, to help new users recognize advantages, to help new users become chart readers. And you have to recognize some very simple concepts in order to be able to piece them together for a trade. So this is my encouragement for you guys. And I created this section in the spreadsheet so that you would have a guide to get you to where you want to be. So take 25 pictures of strong triggers, the same way we did in classroom earlier, guys. And don't just take the picture. Take the picture. Whoops, where is my recent? Take the picture and talk about why they're strong triggers. Talk about what rule that pertains to. Talk about the advantage that's present. And what you're doing is you're creating this recognition, not just a look, but association with advantages. So when you look at your charts, you say to yourself, let's go to it. Where is it at? My smalls are above the large. I do have the advantage of momentum. And then you will take that look and you'll say, but dang it, it's directly into resistance and my triggers are below. I do not have the advantage of a clear path. And if you go through this simple concept, guys, it's 265 pictures. 265 pictures will take you 4 or 5 hours maybe to annotate, to go through. But if you talk about the whys, why are they strong? Why are they weak? Why is it clear? Why is it a termination? Then what you're going to do is you're going to commit a look to an advantage. You're going to piece the two together, and you're forming this ability to be a chart reader. And then you're going to take those 3 pieces and you're going to turn them into a trade. So I would encourage everybody to go through this drill. And the few of you that are actually doing it are finding great success with it. You're becoming better chart readers. You're trusting the methodology more. This is a high probability trend trade checklist put to pictures. So one of the things that we talk about is strong tops or bottoms. There's a video associated, and a strong top or bottom just means that a termination reversed the market, that none of the triggers get through the termination and it reverses the market. This is the precursor for greatness. It identifies momentum and weak triggers so that you can use it as a cheat sheet as you go back. It also tells you what they mean to you. It identifies terminations, potential to break and broken, and it identifies the window of opportunity. So this is your let me study this every morning for 5 minutes before I start simulating. Let me burn these looks into my mind so they become easy. That high probability trend trade is a trade that when you follow the rules typically wins 70 to 80% of the time. And I'm going to tell you guys with all honesty right now that I've never had anybody in the history of this checklist follow it truthfully and do worse than 70%. I've had really smart guys go back and back test it over like 450 days, and I want to say it was around 84, 85% what they got. So this high probability trend trade teaches you to be a chart reader. This high probability trend trade creates confidence through the memory of success. But we're going to piece it together in a plan, because a plan is not just entries, guys. A plan involves entries and exits. So this is the KISS plan. This will be the final thing that I give you this morning. Maybe, maybe not. This KISS plan, and I'm talking to Travis and Drew and Malcolm and Jonathan and David and everybody in here that's brand new. This KISS plan is a stepping stone in your journey. This KISS plan is designed to make you a chart reader. This KISS plan is to get you to where you can understand what your indicators are telling you. And it's designed to optimize your chances of success with the high probability trend trade and that first medium probability trend trade, that 50-50 trade. And it's going to be through simulation, through study, through class feedback, through continuous practice that you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, guys. That is an AI generated fancy way of saying once you can read your charts, you're going to create your own plan. You're going to create a plan that appeals to your senses. You're going to create a plan that identifies patterns that are easy for you to recognize that have a statistical advantage. And you probably won't trade this KISS plan anymore. But until you have that, this is an outstanding way to stay focused. This is an outstanding way to be profitable as you become a better chart reader. I have seen people take this plan and get funded in those prop firm accounts within their first 30 days with Nexgen by very strict adherence to the rules. So this is designed to set you up for success, guys. And the simple plan for consistency. Consistency is the word here. Don't fight the large chart, guys. Don't fight the momentum on the large chart. Don't fight the termination conditions on the large chart. Don't trade into areas that may stop the market. Don't try to go head first into momentum against you. If you can do that, you have literally eliminated like 65 to 70% of the mistakes that new users typically make. Go with the flow. I like to think of my charts as a lazy river. And if it says up, man, I'm going up with the river. And every 38 minutes, I pass the bar. Every 38 minutes, I get a new pina colada and I feel good about the world. This checklist is defined to get you on your entry. This checklist is designed to get you into the market, to get you into the best of the best, to give you a statistical advantage every time you pull the trigger. But you're going to have to manage it, guys. This is the second piece of the puzzle. So one of the things that I tell people is that you will create a plan based on your personal goals that is dependent on your experience reading the indicators. Once again, your management plan will change as you grow with the software. David, you have to trade what you see. If your charts don't line up with Ron's charts, I think Ron is on 7. He may have a different data provider. He may be different days back. He might have a different midnight than you. It's important that you trade what you see. If you are concerned about the accuracy of your charts, go through a rebuild. But I can have different data than my brother, and we'll have very subtle little differences from different data providers. So yeah, trade what you see. And did you get my answer about the white bars in the other room? I saw you ask that question. I wanted to make sure that you got the answer. I was going to check in with you later, but you can just tell me yes or no in here. Awesome, cool. So guys, management. The way your entries are mechanical as a brand new user, the way your entries are nothing more than if-then as a brand new user, so can be your management. And your very simple basic management plan is 100% dependent on your ability to get in where the market is most likely to continue. So if you don't understand the entry, management becomes even more difficult. But if you do understand the entry, if you do understand the window of opportunity, if you are comfortable and confident with finding that entry, you know exactly where your initial stop goes, and it goes beyond the window. So Kenny, here you go. We're 5 ticks beyond the window, right? Because these one-to-ones should be what stopped the market. That should be where it bounces. That's the highest point, and I'm cool going 5 ticks above that. Because honestly, if it goes all the way up here, I don't want it anymore. But they are going to have to come and get me. I am not going to arbitrarily put a stop in my window of opportunity. I am not going to put a stop below resistance inside of favorable large triggers. I am not going to put a stop where the market should go. I'm going to put it where the market shouldn't go, and I'm going to force them to come get my stop. I'm not going to make it easy for them. If they can't get there, the odds are favorable that I'm going to go ahead and get one of those reversal bars in the direction of the trade. If I do, I'm going to reduce my risk 2 ticks above that reversal bar, and there's nothing for me to do at this point. I'm either going to get stopped out. Once again, they have to come get me. I'm not going to offer it up. or it's going to go to my first target, guys. But I've already reduced risk twice. I've reduced risk initially by insisting on my rules being met, by putting my stop where the market shouldn't go. I've reduced my risk further by using a reversal bar to reduce my risk. And now there's nothing to do but either get stopped out or have my first target hit, guys. And if it hits my first target, I'm up $100. And I'm up $100 and it feels good. And it's $100 in my account, and I'm excited and I'm confident and I'm developing trust in this methodology. But everything so far has been a series of if-then. If I get filled, then my stop goes there. If I get a reversal bar, then my stop goes above it. If my first target gets hit, I get paid, woohoo, and my stop goes to break even. And there's absolutely nothing for me to do at this point, except either get stopped out, break even, or have the market hit my second target, guys. And for the brand new users, for the KISS users, your second target is $200. And this one highest probability trend trade, this one if-then scenario, this one emotionless run at the market is net $300. And all of you think that you need to make more to make more. Everyone has this misconception that a $300 trade isn't enough to get rich off of. A $300 trade isn't enough to make money off of. Guys, $300, if that's the best you do every day, is a $1,500 week. And I'm telling you, there's more than one opportunity a day. That $1,500 week translates to a $6,000 month. And that $6,000 month, we're looking at like a $72,000 year. And I'm going to tell you, as your confidence grows, so will your contract. So what if you turn that 2-lot into a 4-lot with the exact same management principle, guys? You're looking at like 144 a year, right? And what if you use one of those amazing trade copiers that are available? Is anybody good at math? Can you tell me what $144,000 times 20 accounts is? Let me pull up my calculator. Off of the same 4-lot, by just using a multiplier. 2.8 million sound good to anybody? And what if you could only do half of that and do 150, or that $300, right? $576,000, $500,000 a year. Guys, these are just math, right? It's just math. You still have to learn the trades and produce and all that. They're hypothetical, but the potential is there. And one of the most common things that I see in the most successful traders isn't that they look for everything, but rather they look for the best. They don't need to be in every move. They understand that all the money isn't theirs, but they look for their money. And my brother's favorite analogy, and I love this one, and this is Rob's favorite. If you walk into a bank and you say, "Give me all the money," guys, you're a bank robber. And you're going to get tased and hogtied and sent to federal prison. If you walk into a bank and you say, "Hey, may I have my money, please? May I have my high probability trend trade money?" Guys, you're going to walk out with a fat wallet. So for all of you brand new users, learn to be a chart reader. Ask a million questions. Put yourself in a position to be able to look at your charts and simply say, "I have momentum, a clear path. Let me find that entry area. And let's go. Let's take this trade." And then you'll find a million trades after. The first one, and attached to the KISS plan, is the 50-50 trade, guys. The one where there is the potential for an area to break, but it hasn't broken yet. And because it's not broken, it's not a high probability trend trade. Because there is not a clear path, I could never call this trade a high probability trend trade. So if my clear path is non-existent, if it's not there for me, this plan keeps you focused on both momentum and the best of the best entry areas. So your KISS plan says that the market must be coming from a good top or bottom. And if you didn't learn that lesson from high probability trend trades, it's going to become difficult for you to take a 50-50 trade with the highest chance of success. It insists on odds favorable momentum on both the small and the large chart. And once again, if you don't know the difference between strong and weak triggers, it's going to be difficult to give yourself that advantage going after this medium probability trade. And then one thing that it says here in bright red is that divergence can't be present on the small chart, which means that you have to understand that divergence prints on the third bar. And if you are trying to pick an entry that's going to happen before that third bar, you run the risk of breaking your rules. Or if divergence prints, you've lost your advantage. One of the biggest reasons that new users lose this particular trade is divergence. But if you can mark yes to everything, you're going to enter at the area, and you're still going to enter it knowing that you are not in a high probability scenario, which means that you will have to manage it aggressively. And then this KISS plan reminds you that divergence is a no trade scenario, and if you accidentally did it, get the hell out. And then you have to manage it, guys, and management's not the same. It's not a high probability trend trade. You're going to be more aggressive, which means if divergence prints, there's the third reference. You're going to exit this trade. You're going to take quick profits, either $100 or the first trouble spot. And if your first trouble spot's 50 bucks in the distance, guess what? You just took $50 on your first contract, because you're not going to hope that area breaks. You're going to get paid at it, and then you're going to go break even. And it can either break or not, guys. You're going to take quick second profits, and that is going to set you up to get the most out of medium probability scenarios. So what I'm going to give you guys right now, I'm going to give you a whole slew of things in case you weren't grabbing them off the get-go. The first thing is my spreadsheet. My spreadsheet has 4 tabs on it. The first tab is the copy of the tracking. So I want you to take it, and I want you to get rid of all that stuff. That's not yours, that's mine. So go through and start filling that out. The second is the 101 section. Strong triggers, clear path, entries. I'm going to leave these for you, but it's your job to go find 25 of each if you really want to be a chart reader. The next one is favorite looks. When you see rules met, they go into your favorite looks. As you begin to grow, you'll learn how to manage, you'll see patterns, you'll do all these things. And guys, this is just your study sheet. So if you're brand new with me, take 20 minutes this afternoon and start looking at these. And we'll click on this one. And say to yourself, all right, I recognize that. That's momentum. And I noticed that it didn't hit an area, and that's that clear path that Mark was talking about. Let me commit this to memory. And I noticed that he circled the tail, but wait, he said we don't trade tails. Whoa, it lines up with support inside of favorable large triggers. I'll be damned, this is one of those high probability trend trades. Let me commit this look to memory, because this is my best chance of success as a brand new user. See how I did that? So go through and use this spreadsheet, guys. Make this spreadsheet everything that you do every day. Like, make it a huge part of your day. I'm also going to give you the KISS plan. I am going to give you the high probability trend trade checklist, right? So you're going to get the KISS plan, so you have something to follow while you're new to become a chart reader. I'm going to give you the high probability trend trade checklist, so you can print this out and police yourself so that you have rules to write on your chart. I'm going to give you the same checklist with pictures of what it means to have your rules met. I'm giving you the chart reading 101 so that you can become a chart reader ASAFP. And then I'm also going to give you guys the same PowerPoint that I teach off of. And this PowerPoint has all the answers, honestly. But it does rely on my narration a little bit. But I want you guys to see something. Is the PowerPoint also has some management ideas in there. We don't talk about this in the beginning because it's a little more advanced. Let it be very basic at first, but guys, there's even more information there. And all this information, none of it is secret. None of it is top secret or kept from you. You can find it all on the Nexgen website and the Discord resources page. And it's repetition that creates recognition. It's doing the same thing every day, so that you can always expect the same results, guys. And I'm going to tell you that if you focus on the process, the results come. So there is crude oil into a termination condition. There is the S&P. Watch this. Odds favorable. We're 50-50 on a divergence high, and divergence printed with weak triggers, guys. That's a no trade scenario right there. No reason to go short into support. And right now we have some indecision. Right now I have large triggers up and small triggers down. I have a termination condition below me, and I'm waiting for rules to be met. So are there any questions right now? Are there any questions about a high probability trend trade, guys? I ran this one over a little bit today because it's important to me that you new users really get this. There is also on YouTube, I'm going to show you guys, I'm trying to give you guys everything today. If you go to YouTube, to the Nexgen page on YouTube. So every live class that I think I've taught for the last, I don't even know how long, 5 or 6 months is on here. The first hour is the same hour every day. So this hour will be this hour, will be this hour, will be this hour. And what makes this classroom amazing, what really sets this classroom apart, is that the next 2 hours or the next hour and a half are going to be you guys posting charts and you guys posting questions and you guys seeking clarity, and you will literally drive this class in the direction that you want it to go. But it's insistent on you posting your pictures, asking your questions. I can't see your faces, and if you're sitting at home confused, I don't know. And if you're not getting the answers that you need, I'm just going to go ahead and tell you right now, it's your fault, because I want to give you all the answers. I just need you to ask. I just need you to tell me. And I will, I promise, say the same thing 1,000 different ways until it clicks with all 37 of you in this room. So, guys, I'm going to take 5 minutes. I believe breaks are important. I believe getting off of your butt, stretching your legs, taking a deep breath is a vital part of not getting so focused on your rules not being met that you create new rules. So I'll be back. I would encourage you to go take a break as well if that's your thing. In about 5 minutes, we'll come back. We'll start posting on charts. New users, do me a favor. New users, new users, new users. Post a picture in the room. And just in case, here's the how-tos once again. If you're a little nervous today, maybe you don't have it down, get with your salesperson this afternoon and have them walk you through the process again if you need it. Go back, watch this video, watch the YouTube video. But I want to see pictures from you guys in this room. I want to see that you can post a picture. I don't care what the picture is, right? Pull up the internet, and if you're looking at cute puppies right now, oh, they're so adorable. I want you to take your capture software and I want you to go snap and arrow and holy Mark, look at these adorable puppies. And what this does is, first, it lets me know that you appreciate adorable puppies, and that gets you bonus points with me. But secondly, it lets me know that you're comfortable posting in the room, that you know how to post in the room, that you're able to take advantage of what is honestly one of the most important tools that we use in our education, getting that feedback. Malcolm, thank you for that. Gold star. Guys, I'll be back in 5 minutes, and when I come back, we're going to have some fun. See if you can stump me. That's always fun, too. I'll talk to you in 5, guys. All right, guys, I'm back. Malcolm, that is perfect. Absolutely perfect. Guys, one of the other things about this classroom, and I'm going to tell you right now, in my previous career, I was an HR nightmare. This is a very laid back, relaxed environment. The idea is that you're comfortable. Man, Rob, when I'm figuring out 15%, this is years in the restaurant business. 10% is 78 and half of 78 is 39. So I just add those two together. That's how you get the 117. That's how I taught my kids to tip in the beginning. But only we did 20%. So I can math, I can't algebra. So guys, we're going to get into it. We're going to get into that second hour. We're going to start posting or looking at the pictures that you guys posted in the room. I do scroll from top to bottom, top to bottom. So if I miss a question or I miss a post, guys, please let me know. I never skip over anything intentional. I think everything has value. And man, we were flapping our gums this morning a lot. So let me get to the beginning of the day. And just a little reminder that a lot of these trades aren't going to be high probability trend trades. A lot of these trades are going to be you guys taking chart reads and doing something wonderful with it. Joel got us going here, and Joel said, man, I've got odds favorable momentum. My path is clear. I can take a pullback to resistance inside of favorable large triggers, and I can capitalize on this move all the way down. And Joel F., beautiful. Absolutely freaking beautiful. And then Andy follows it up and he says, hey, you know what, Mark? With a good bottom and odds favorable, I'm really looking for that window of opportunity, but it didn't get me, and that wasn't my money. But notice that momentum leads the way, that momentum pushes it up. And Andy, there will be a time in your life, my friend, where you will take this trade without hesitation because of no divergence, because of the one-to-ones, because of the mid-band, because of the strength, and you will be able to capitalize on that one. And then this one, 50-50, small's above, larger not. Everything is strong. There's your tail. And it's kind of right in the middle, right? And it's a beautiful look to carry that momentum up to the top. Outstanding. That works too. Jonathan, couldn't figure out how to capture. No worry. Let's fix that. Do you have your capture software up? No worries, Andy. And let me see if I can pull this over. Nope, that's not what I needed to pull over. I need to show my other screen. So Jonathan, let me change screens for you real quick. And I'll show you the easiest way. No worries, I got you. And Jonathan, this is the most important question that you could ever ask, and I appreciate that you would. So can you see my mouse? Can you see what I got going on here? I love that you guys are posting puppies. I'm going to go to my search bar and I'm going to type in TechSmith, TechSmith capture, anything like that. And it should bring you up to the TechSmith capture icon here, at which point I will open it. And that's what's going to put it up on my other screen. And then just in case you don't have it, can't find it, let me scroll back up to the top. Chris was nice enough to drop that TechSmith link in there. Nope, that's screen capture how to. There's the TechSmith tool. So if for some reason you can't find it on your computer, there's a link that will get you right where you need to be, Jonathan. So do me a favor, either find it on your computer or download it real quick. And let me know when you have it, and we'll go through that process once again of capturing. And then Cisco. Here's a visual of exactly how to do it. And then we'll do it a second time when Jonathan has capture up so that we can make sure that he's good. But sometimes this is enough. And they're labeled in 1, 2, 3, 4, 5, enter. And you're good to go, Cisco. But I'll run through that again too. So Jonathan, just let me know when you're there. and we will rock it out a little bit. Gary is one of our more advanced traders. Gary has a little more experience than the average bear. Um, and Gary is relying on momentum here. And it's not a high probability trend trade because it's directly into resistance. All the triggers are below, right? It's split triggers. But Gary's got enough experience to know that without divergence, with this pullback, he'll take an opportunity. And then, Gary, I have no idea why you allowed yourself to get stopped out so rapidly. You never even gave it a chance to work, and you had to get back in and try to go break even on it. And guys, this is a trust issue right here. When you know you're trading into trouble, and sometimes you can trade into trouble, man, commit 100%. Commit 100%. Wait for that reversal bar. And if you're unsure, wait for the reversal bar to get you in. Use it for a stop. It's a good shot at a lower probability trade, and it just got mismanaged on the first contract, but great recovery to get in and get it back, Gary. Nice job. And then let me see where we're at here. And then Cindy, you know, I posted some pictures for you this morning too. This is not a high probability trend trade, ladies and gentlemen. This was my first trade this morning. And I want you to see how it incorporates chart reads. Want you to see how it incorporates chart reads. The first chart read is that I've reached termination, guys, and I had a termination on every chart that I own. My second chart read was that my large triggers were a full bar away. This is what we call the gap theory. And the gap theory says that if price accelerates away from large triggers, smacks into something solid like a fib or a midband, it's likely to close the gap back to the triggers. That's all it is. It's not a trade. Because of the gap theory, Cindy, you can put this one in your collection. My smaller chart gave me two divergences from the low, right off the fibs. I took a shot to close the gap, and it worked out beautifully. It worked out great for me. And that's taking a chart read, a large chart read, and using a small chart to be able to capitalize just from a little repetition and a little having seen it a few times and understanding how to give myself an advantage. And I'm willing to take one shot at trades like these. And the cool thing is, let's see, where are we at here? Hold on. It is a repeatable pattern. Let me see where we're at here. And then on that same trade, nope, here's Andy. Andy takes the same style. Large chart says pivot stop out, says multiple terminations, says weak triggers, and Andy's able to capitalize a little bit on the way up. And then again, guys, I don't keep secrets. If I take a trade and post it in the room, I'll tell you why I did what I did. Terminations everywhere. Second higher divergence. This was my entry, guys. I took 4 or 5 pictures during this trade. I take an entry trade, I annotate it, I talk about where I think it's going, what I think it's doing, what my read is, why I took my entry. I'll even talk myself through the management side of things. This is why I managed it the way I did. So it's all about opportunities. It's all about chart reads. It's all about being able to see the same thing every time and capitalize. Andy says odds favorable. There was his entry, there was his exit. And then Andy, that was not your money, my friend. That's all it was. You exited because your rules were met. Guys, you can't regret or have remorse over what happens after you take a rules-based exit. Sometimes the market's going to go do exactly what you thought it was going to do. If you don't stay true to your rules, if you don't focus on having the same reasons for entries, the same reasons for exits every time you take a trade, you open the door for your emotions having more power than your rules. This is one of those 50-50 trades, and on this 50-50 trade, there were 2 divergences. And I took the trade anyway on simulator, guys, and I will do this in the classroom where I knowingly break rules to show the results. And I got stopped out of this trade. And that market just railed down from there. And you have to take pictures like this. You have to take losers. You have to make mistakes because that's how you're going to learn. That's how you're going to learn to not make those mistakes over and over. And then Gary, once again, let me see what we're doing here. Gary had everything going up and he enters the market, makes some money right at the trouble spot. And then when terminations roll it over, Gary takes his own style trade with that momentum and drops it all the way down to support. And Gary, just beautiful. Not an HVA trade, but nice execution. HVA trades require termination conditions on the large chart. You didn't have it. What you did is you took advantage of being able to grab hold of that immediate momentum with weak triggers and divergence to ride it down to that next area of support and then wait out the retest. Very nicely done, Gary. Strong work. All right, let's see what's next. And guys, if you have questions about any of the charts that are posted, please feel free to ask. Mario, little test chart, works perfect. Coming through. And then we got into a lot of slow, not a lot of charts posted. And then here's Ron. He calls this the pirate trade. Ron's found a pattern that uses divergence and weak triggers to be able to grab that snapback. And guys, this fights everything. And Ron has made it his mission in life to give me heartburn and make me bald prematurely. But one of the things that this chart read does is the first thing it does, it says on the large chart, there's losing momentum. And then on the small chart, you'll notice that that momentum loss is verified. And there's weak triggers. And Ron has found a way to capitalize right up. Guys, it's not a high probability trend trade. And it took Ron months to recognize these patterns to be able to take advantage of them. And he does a great job with it. Not a high probability trend trade. Very much a pirate trade. That's why his nickname is Snake. Let me see where we're at. A lot of chit chat in the room today. That's always fun. And then Ron says momentum for the win. Everything says up, clears trouble, odds favorable over here. Nice little snippet, guys. Chart read for the win again. Chart read for the win. Termination, reversal, everything goes up. Cav says, when I have momentum and I clear the area, I'll look for an opportunity for a base hit. Once again, great chart reads, not high probability trend trades, guys. They don't always have to be high probability trend trades. Gerard showing me puppies. You guys are freaking amazing with the puppies. I really didn't think that would catch on so quickly. That's awesome. And then Cav, how about if we call this a clear path trade? Can we meet in the middle and call it a clear path trade since we don't really have momentum so much? But what you do have is a market that's railing to the upside and you were able to pinpoint exactly where it's likely to go. And you said, you know what? I'm just going to grab a little bit of that because it's the NASDAQ and the NASDAQ moves. And guys, that's experience. That is experience. That is trigger time. That is Cav saying, I've seen this. I've seen it so many times that I can capitalize. And Ron, that's good advice. Don't try those trades until you know the high probability trend trade inside out. You will get slaughtered. And then Erla's like, you know what, Mark? Oh, no, there are more charts. Let's see what we have. Woo, this is hard. So let's do it this way. Large chart says odds favorable. Um, Small chart says odds favorable. Range chart says odds favorable, and you exit with a loss of momentum. And this is 100% momentum. And notice that it's just a base hit. Momentum in, momentum out. Erla, I like this, and you've recentered yourself a little bit. And Jonathan, you're ready? Cool, cool. I'll be right there. Nice job, Erla. Nathan, happy birthday. Guys, Nathan turned 21 the other day. Don't you wish you were doing this at 21? Beers on Mark. Hell yeah. You come to Dallas, Nathan. I got a beer for you. Let's see what we have. Termination, full reversal. Get to the other side of trouble. Get in, get out. Who was this? This was Nathan. Nathan, you're kind of expanding a little bit, putting that next level trade in there. Nicely done. You turned 72 last week. Happy birthday, Gary. Isn't this like your third birthday this month? I'm just kidding. I turned 52 last week. We are so close. No worries, Jonathan. And then if you want, we'll do it again tomorrow, and we'll do it every day until you're there. Yeah, just keep watching. We'll be good. I will not leave you behind. Guys, this is Paul. Paul's been with me a long time. And Paul says, you know what, Mark? When I have odds favorable momentum, when the path is clear, I'll enter at the area and get paid. And then because Paul is a good sport, and because Paul knows that I was going to see this, I want you guys to see this one pitfall that new users make. Paul is at a level, he doesn't have to show me everything, right? Paul shows up, tries to teach little lessons here, show you guys how it's done. But guys, if you post a trade in the room that is clearly a winner and you're down money, it means that you're hiding trades. It means that you're not sharing everything. It means that, and Paul understands how to read charts, and he probably policed himself. But if you're the brand new user and you're not showing me everything, then it's difficult for me to help you avoid those problems later. And again, Paul, I feel like you probably know what happened, right? So, but Paul has been doing this forever, and I remember when Paul started, and notice that everything agrees. Everything says go. Paul took it. And guys, he believes in the power of the high probability trend trade enough that he wants to share this with you guys, that he wants to say, hey, new users, keep it simple. You can make money with the correct trades. And it works. All right, Josh. Odds favorable to the upside. Man. How's that vanilla working out for you, Josh? Everything on every chart says up. Everything is above the areas. That divergence didn't even exist. So you can't draw an arrow to that. That divergence didn't even print till all the way down here. So you didn't take an HVA trade because the HVA line wasn't there yet at your entry. You took a white bar trade. So what's the first rule for taking that white bar trade, Josh? What's the rule that gives you the highest chance of success? Good top. So congratulations, you got paid. I'm going to tell you that trying to catch every white bar without the rules being met is going to absolutely whip your ass 9 days to Sunday. Ask me how I know. When I have time to cry into a tissue, I'll tell you the story. Man, I've been there. I've done it. And when I learned these white bar trades, I'm going to tell you, it got to the point where I took every freaking entry I could find. And I lost so many more of them then I won. And you had a good look with a pivot stop out, right? And it turns. Um, it's tough to fight those triggers. So good recognition here. It's just a little bit early, I think. If all my charts are green, I'm gonna wait for the red. That's it. That's all. No, if and if you're omitting charts, so if you're taking trades just because of a range chart, just because of what size is that range chart? What market are we in here? The S&P. So you're letting an 8 range, a tiny little 8 range chart, dictate going counter trend. How come you're not showing me long trades, right? Why are you not showing me trades that go with everything? I'm just saying, you told me vanilla this morning, so I'm going to get you a little bit on this. Where's all of your long trades when everything's set up, right? This is probably a little bit boredom. This is the son of a bitch. I didn't get paid once on the way up, so I'm just going to go counter trend, and that's okay. You do you. That's pretty low probability. I'm not going to lie. And then Paul triggers inside on the 5-1. Paul, I'm not sure that breaks your rules, my friend. That's odds favorable. That's everything up. It's only one divergence. It's a pivot stop out at support right there. It's a smart stop. I don't think that's a horrible trade. I think this is where, well, your challenge is those split triggers, right? And when the split triggers happen, that's where the indecision happens. And that is where, and guys, I've said this 1,000 times for you guys that still take these split trigger trades, it's okay to wait for an up bar. It's okay to wait for an up bar to get into that trade. There's a little cost of confirmation, but it's not as detrimental as the cost of total failure. So when those triggers are split, when the weakness is there, insist on a confirmation bar. Your money's worth it. Your money is worth. Yeah, and it is at the bottom of the window. I agree. But that weakness, this divergence, it just says to me, while this is the best spot for entry, these split triggers, you have two different moving averages, right? And they don't agree anymore. And large charts slow, small charts fast, just to turn this into a chart read, right? So I don't see the change on the large chart. The large chart says, hey, let's go. The small chart says, hey, I'm losing steam. And you're 100% right by going at the bottom of the window because of the loss of momentum. But here's the difference in my eyes. And again, my eyes may not reflect your plan. Is that if my large triggers were like that, and my window of opportunity was clearly defined, one on top of the other right there, all day long, Paul, I would never fight you on this one bit at all. But because it even reversed from the correction point, I know that it's a problem. And I love an up bar right here. I love something that says, damn it, we're going in the direction of the trade. That's all. You don't have to change your plan. That's just my 2 cents on the read. This look here, divergence, I think we talked about it yesterday as well. Divergence from the high, get a little confirmation. It'll keep you out of a lot of losers. And then there is weak triggers at a termination. Everything rolls. You take the pullback right to the large triggers. Cav, this is beautiful. This is the same trade that Nexgen's been teaching since 2004. Let it roll. Triggers roll. Grab that pullback to the large triggers. I love it. And I like your patience of letting it close and then letting it go down. And I think that that's a solid part of your plan. And then Gerard showing me a picture. Oh, let's go big. Small triggers above large triggers widening, wick pulled back to large triggers, bars above blue support. So what you just pointed out, Gerard, is what it looks like when that momentum carries it up. What market is this? This is crude. Let's take it one step further. Whoops, guys, my Ninja Trader is gone. So let me open this up, and we're going to go back to crude oil, and we're going to see what the small chart looked like too. Cav, have a good one, man. So your large chart looked pretty solid, right? The potential to break, all that good stuff going on. We're going to go through and we're going to see what your small chart said too. And maybe there was a possibility there. Maybe there was entry there. But remember, it's a 2-chart process. Are you comfortable getting the snapshot of both charts? You really have to click and drag. If you hover over just one, it only gives you one chart. But when you give me both charts, what you do is you open the door for me to see not only that great read that you had on the large chart, but also how we could have capitalized on the small chart, right? How we could have refined a little bit and maybe got in at the best of the best spot. I just like that you're posting pictures. And I'll tell you what, that was pretty painless, right? That didn't ruin your day at all to post that picture. Made it pretty easy. And I'm telling you guys, I'm the warm fuzzy Novak. I love to celebrate victories. I love to find the best of the best in everything that you guys present. But I'm also a huge fan of being honest with you and telling you, man, you got lucky here, or wow, that's fighting a lot, or oh, your entry could have been better, or why not get paid at the blue line, right? I don't mind saying that. That's my job, guys. My job is to put you where you told us you wanted to be. So I'm going to try to do that every day. So Gerard, thank you for posting. While my charts load, and that's going to take just a second, let me pop something in here. Just going to share a little bit, guys. I write a lot. I write a lot of different things about a lot of different things. And it's just, for me, it gets what's in my head out so that I can kind of share it with you guys. But I want to talk about this, especially because we have so many new users in the room. The key to everything that we do is having a foundation. The key to everything that we do is you becoming a chart reader, guys. And then every day, every week, you compound on that solid foundation that you built with the high probability trend trade, and it takes you to that next level. So for you new users, and this is frustrating for some of you, for you new users, I blanket you with very conservative rules. I talk about the KISS plan. We focus on the high probability trend trade. We talk about recognition of advantages that optimize your chances of success as you learn to read the indicators. So for you brand new users, all termination conditions are bad, right? Don't trade into them. Rule number 2 is not met. No way should I ever trade into a termination condition. No momentum is the kiss of death. An area beyond triggers. You might as well chew the cyanide pill. Your day is over, right? And it's blanket rules because it increases the likelihood of success. And this is kind of how this class is designed. But these things aren't always bad. Guys, termination conditions don't always hold, and you'll begin to recognize patterns when they may not. And slowing momentum isn't necessarily a horrible thing when everything else is perfect, but you don't know the exceptions yet as you learn to read your indicators, so it's safer that way. And then just like anything, the more time you spend with it, the more you're going to see, and this begins to open doors for you. But one of the biggest challenges, and I post this in the room when I know that I have a lot of people in here that are really focused on rules, is you're going to see older, more experienced users taking trades outside of that high probability trend trade, and it's going to create a little confusion. And you're going to have this desire to do what you saw Ron do, or you're going to have this desire to do what you saw me do. Mark didn't have momentum. Ron fought the trend. Cav went not from an area or whatever. And you want to break those rules too because you see the success that these people have. But the short answer is you don't have the reps to know when it's appropriate. You haven't done the study. You don't have the pattern recognition. But then you start to get it. Then you start to get that pattern recognition. And you start to see when you can make these exceptions. So learn the very basics, guys. Learn the process that yields the results. And the results tend to follow. And this is where the KISS plan comes in. If you follow that basic, if you follow simple rules and you're okay with not keeping up with the Joneses, you really can find an extraordinary level of success. And I've watched it over and over the years. And the further new users deviate from the simple, the longer it tends to take them to get to where they want to be. So question everything. If it's not clear, question it. If it doesn't seem consistent, question it. If you're wondering why so-and-so could do what they did, question it. And then what happens is all of your great questions begin to formulate a plan for you. So Gerard, let's go back to what time zone are you in? Is this Central time zone? Is this Eastern? Is it Pacific? I just want to be able to line it up. I should be able to line it up without knowing that. Let's go back and see if we can find that look on crude oil. You're in Pacific, so that would have been 7 a.m. Let me do it. And I'm Eastern, so that would have been like 10:45. And that was crude oil. Let me see if I can find the price. 7,800. Is this today or yesterday? There's 7,800. So it was this one right here. That's the one that you had. Cool. I got it. So that was one of the ones that we circled earlier. So let's see what it looks like at 10:07. Crude oil 5.1. I like doing this. I like going through and that says that it should be on all charts. Am I missing something? I think that was yesterday. I think that was yesterday's chart. That was yesterday's chart. That's why I can't find it. You scrolled back a little bit and caught yesterday's, and that's cool. There it is. So your setup right there, Gerard, check it out. This is kind of cool how this happens. There's your termination. It creates a full reversal. It gives you odds favorable and the potential to break. Your pullback comes directly to support inside of favorable large triggers. And this is kind of that lesson that Paul was just nice enough to teach us. Because of the divergence in the weaker triggers, it does push lower. Because it's not a clear path, it has the potential to push lower, and it certainly does. And then it goes off to the races with all that momentum. So Gerard, what you identified is a great look on the large chart, and your small chart told you how to capitalize on it. So thank you for posting that. And you are on your way. You are on your way to developing trust. And then Paul, trying the momentum trade. I like it. I like it, Paul. That's the perfect look, man. It is the perfect look for the momentum trade. It is odds favorable, odds favorable, odds favorable. Triggers break, pulls back. You're in a little bit low, but you took it on its way up. I understand why you did what you did. Your stop's in the right spot. Man, these just don't always win. And I think that, Paul, you couldn't have had a better look to take it. You had a divergence off the low. You had a higher divergence off the low. Everything was up. Everything was screaming. You took it in a good spot. Your stop made sense. And guys, these momentum trades that you love, that we all love, when they fail, they turn into trend trades sometimes. And I think that's your next picture. When the momentum fails, it turns into a trend trade. And you still had the rules met to go long there. And the problem with this, Paul, is maybe with divergence, don't try for the momentum. To take that trade properly, you don't know about the divergence yet. That's the challenge with that, is to take that trade properly, you don't know about the divergence yet. And then this is one of those ones where because it's split, because it's floating, A little confirmation gets you up to pretty easy profits there. Does that make sense? Yeah, it's easy to say after the fact, oh, divergence printed, I shouldn't have been in there. But to take that trade correctly, you'll never know about that divergence. It'll just be the potential, like you said. And guys, for those of you that haven't seen divergence kind of try to print real time, is you'll literally see this flashing bar, this flashing number over here. And this says, hey, there's potential for divergence, but divergence won't be true until the third bar. So this divergence didn't print until all the way up here. And this divergence didn't print until all the way up here. And even on a small chart, right now we have potential divergence to the downside, but until the third bar prints, we'll never know. So this is where being able to read your indicators in a moment pays huge dividends. And let me tell you why. Because if your rules say, oh, I love how it all circles back to rules. If your rules say, dun, 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 let me go to the rules. And I'm going to show you where this one gets misused the most. If your rules say no divergence on the 5-1 to take that trade, then if you're waiting for a long trade and there's divergence potential, you can't enter on the first bar. Otherwise, you have the potential to break your rules. So something to think about. Something to think about. All right, Miss Michelle. Michelle, you said with odds favorable momentum, with only 2 divergences, with that mid-band stuck in between the correction points, and everything says up, you love the idea of taking a long trade to get paid. Pretty cool, huh? Michelle, how did you feel in this trade? Was it easier than trying to go counter trend? Was it easier than trading in determination conditions? Was it easier than hoping and wishing and wanting? Guys, I want you to remember the feeling of when it's easy. I want you to remember what it looked like. I want you to remember what it felt like. I love this trade, Michelle. Are your rules met? How's that for a Sunday school answer? Let's do this. Doesn't matter what I think. I can't stress that enough. Doesn't matter what I think. So let's start on the large chart. Do I have momentum on the large? Yep. Do I have a clear path? Yep. Remember when I said that these are the 2 most important things, guys? When the large chart says go, let's find it. So let's see what we have here. Your first entry was not in an area inside of favorable large triggers. Would it be safe to say that because it was floating, your initial stop was down here? Cool. Perfect. So let me show you something that happens. So right here, when the large triggers get above that divergence, that's out of play. So we're working on our second divergence. Right? 2 divergences are not a termination condition. Are you with me so far? Which means that my rules for high probability trend trade are still in play. So far, so good, Michelle? But what you said is, hey, Mark, look at that weakness. Look at that weakness with the small triggers inside. Look at that weakness with the divergence. Look at those split triggers, Mark. Look at the double correction point. Well, my chart reading says that this is problematic. This look, even with rules met on the large chart, may push a little lower. So far, so good? I'll force the market to give me a reversal bar to enter when it's not perfect. And at least then your risk is established, right? If you get in on the reversal bar, you're in at like 07. Your stop is in place. You know there's two divergences, so your protective stop gets moved to where divergence would be true. If it happens, you're out. You took a loser. If it doesn't happen, then the market probably does everything that you expected it to do to get up to that next area. So I can't tell you to take a trade without rule number 3, but I can give you a little opportunity to maybe understand how you can be just a shade patient when it's not perfect. Why not? Or even better, why not do this, Michelle? Let me show you a cool trick. If this reversal bar is my entry signal, I can right click and go sell stop market. And if I get the reversal bar, it'll put me into the trade. Then I don't even have to try to time it out so much. I'm literally in the trade right off the reversal bar. And of course, this is all triggers up, so probably not where I want to be. You have a divergence and I have a divergence and you don't. Cisco, do me a favor. Right click on your chart. I'll do it too. Right click on your chart, go to reload all historical data and click it. And let's see if that divergence shows up. My brother and I had this discrepancy this morning. And once I reloaded all my historical data, we lined up once again. But I'm 10 days back, but we may also have a different data feed. Did you reload it? I'd be curious to see. Sometimes it happens. It doesn't look like mine is going to be there on this one, which means that your chart was right and my chart was the mistake. Pretty cool, right? Yeah, and now I don't have it, Cisco. So it needed to be on my end. And this is a good lesson to read your charts. Remember, guys, that I adjust my charts all day long. I write on my charts so much that I crash NinjaTrader 10 times during class. So there's a good chance that if something is wonky, it's on my end, not your end, if yours are all good. But yeah, we line up perfect now, Cisco. And then Cisco, did those pictures get you to be able to put it in the spreadsheet, or do you want me to go through it once? And I'm more than happy to go through it once. And then Jonathan, same thing. I'll go through it because I'm through all the pictures. So when I'm taking pictures, great lesson for you guys. Stomp on that capture button. And when you do, remember it's a click and drag tool. If I hover over just one chart, check it out. It'll only give me one chart's worth of information. So what I really need to do is I need to go to the top left of my large chart and drag it to the bottom right of my small chart. You don't have to show me where you're at for the day. You can, though. I love to celebrate it. And then when I release the Kraken, click the camera, it comes up. And this is where, so Jonathan, if you're watching, this gets you to the annotation screen where you can click and drag arrows, you can click and drag shapes, and most importantly, you can click and drag and create a text box and tell me everything about everything. Tell me why you did what you did and what you saw and what you thought and what you felt and why you entered where you entered and why you exited where you exited and why you moved your stops before you actually hit anything. And then we'll take that and we'll talk about it. And then click the upload button and it takes that picture and it puts it into the cloud. It puts it into the screencast cloud. So I have to copy that address and then I come to my spreadsheet. And the first thing I do is I right click and I'm just going to paste it in. And guys, one of the cool things is Cisco, this is awesome for you guys that are actually using the spreadsheet, is after you post a link a couple times, it will default you to the link button. But until you do that, you have to have that pasted in. You go to the insert button. Then from the insert button, you're going to click on that link button. And that's what sets you up for the hyperlink. And hyperlink is just a clever way of saying, I don't want to look at appscreencast.com, XYZ, PW 473952. I want that to say kick-ass long trade, right? So I paste that address into the address bar like I'm going to Google or eBay or Amazon or whatever. And then under text to display, I'll be like, man, don't miss this long. And once I click OK, I've got that one, and I don't have to hit Control to activate it. I can just click on it, and then I'm good. And then I can post it in the room. I can go back and study it. I can do all those great things. Resistance for the win, right? Termination condition for the win, at least short time. And guys, what is rule number 2 telling you here? Rule number 2 is telling you that there are very key areas in the market and neither force can break it. The buyers can't seem to push it up and the sellers can't seem to push it down. The smalls are below the large, the background is red, the charts don't agree, the triggers don't agree, the paths aren't clear. This is what we call a go make a sandwich pattern. This is what we call, I could guess that support holds, but that sure seems silly, right? Or I can hope that the market still goes down, but all my triggers are above support. I don't know what a divergent short is. So I don't know what a divergent short is. I know what momentum is and I don't have it, right? I know what a clear path is and I don't have it. I know what favorable large triggers are and I don't have them, right? So Cisco, maybe you have a different plan than me. Cisco might say, you know what? When I get a loss of momentum at a key area and then it gets confirmed with a second lower loss, well then this might have me looking for something over here. This is a sign that says, hey, we're probably going to go down. Let's look for a low risk opportunity. And Cisco might say, if they snap back right to those small triggers, right to an area at them, maybe I'll take a shot at this short trade. Or maybe he says, oh, I want it to come to these triggers and then I'll take a shot. Or maybe he says, I'm just going to jump in and hope that it never comes back, right? And that's all on Cisco. That's got to be Cisco's plan. If I'm a brand new user, I don't have rules. No jump. But my point is that it doesn't matter to me what your rules say. But if you take the trade, take a picture, annotate it, right? Tell me why you did what you did. Cisco would post a picture saying, Mark, check it out. Second lower divergence, firm resistance. Everything's going down. My larger down, my smaller down. I realize that it's not a clear path. But if these guys pull back to 34 with that momentum on both charts, well, hell, that may be a great opportunity for me to ride this wave down to 79.09. Does that make sense, everybody? There's your termination. There's your trigger roll. There's your smalls with odds favorable. The small triggers broke the fib. Let's see if it snaps back to the fib. So what's the challenge with it? What do you guys think? What is the one thing that you see on these charts that doesn't fit into the high probability trend trade realm? It's not the trigger lines. They're both down in red. Smalls are in the right spot. What do we think about the clear path? What do you guys think about all those triggers above support not broken yet? Is that a red flag for anybody? If you're a brand new user, it should be a giant waving red flag for you. And then once you become a chart reader a little bit, you'll see what Cisco saw. Cisco said, man, I know that's not a clear path, but check this pattern out. There's divergence from a fib, and there's a confirmation from the fib. Nothing could break, and a second loss of momentum. And the sellers keep telling the buyers to go to hell. And now the smalls are below, and the smalls are below on my small chart, and it's pulling back what looks to be a collision with the large triggers. Cisco might say, might not, I don't know, I'm willing to forego rule number 2 because I have the other two coming together. And then it just becomes a waiting game. What do you guys think? Does that make sense to anybody? This low? Or should it stop out that low? Or that low? Is it going to come all the way back and stop out this low? You know I'm messing with you, right, Cisco? Cisco says if I have two divergences, the most likely option is it should at least take out this pivot, right? That's a chart read. Cisco, I was just doing that because there's one thing saying, oh, it should stop out the low, right? And Cisco, I know that you know what you're talking about. Cool. I just want to make sure. But your experience is like just pouring through the chat right now, recognizing this pattern, creating expectations based on the pattern, and then looking for an opportunity to capitalize on the expectations. Guys, that's all we do every day. Cisco has been with me a little bit longer, and Cisco does it with a little more ease than the average user will, than the average new user. But it's my job to translate a little bit, right? It's my job to say, this is exactly what he sees, and this is exactly why he sees it. And if I screw it up, if I put words in Cisco's mouth, he's got to be like, dude, Mark, that's not at all what I meant. Stop putting words in my mouth. But it's all just chart reads, guys. That's all it is. It's reading your indicators. And then from your read, you determine whether or not your rules are met, right? And then as you grow, your expectations grow based on patterns. So if you read strong triggers, then rule number 1 is met. And if you read no termination conditions, then rule number 2 is met. And if you read that there's an area inside of favorable large triggers, then rule number 3 is met. And once your read confirms all 3 rules, you enter the high probability trend trade. If your read, and that's the most basic form, guys, that is using a read to capitalize on a pattern to be successful. If your read is that you had a second lower divergence right at resistance, then your expectation is that the market will continue down. And man, they didn't get us, did they? It didn't quite get there. Yep. And Cisco, I think your read was in the perfect spot. But what do we have now? Now we have a termination, full reversal, odds favorable. What if they give us a pullback now, Cisco? Can we say that this is an area of resistance inside of favorable large triggers? Can we hope that this divergence low gives us a little bit of push so that we can capitalize on the expectation from the large chart, right? Isn't that cool? Oh, I missed my trade. This sucks. Well, it looks like on the small chart, they're saying, hold on, Cisco, we forgot you, brother. Let's see if we can give it a shove. Just because it doesn't jump in, or just because it doesn't work out, doesn't mean that we just jump in, right? I'm not jumping in right here. Oh, it missed me. I better jump in. I'm saying, man, this is where my advantage lies. This is where the best of the best is. This is where I feel like I have a manageable trade with acceptable risk and a decent profit target. And let's see what happens. But we have been in a range-bound market, which means that 50-50s are less likely to work. So we'll just see what happens. We're just being patient, just waiting. The only thing that we can control is whether or not the rules are met, guys. Weaker triggers, right at resistance, divergence prints, weaker triggers, and it's pushing right past everything. Did I get everybody's pictures? Did I miss one of Paul's? Nope, we didn't. We saw that one. I think we've got everybody's pictures. I think that we've talked through a few things. I'm going to go see what my dog's barking at, guys. I'll be back in just a minute or two, and then we'll finish out class. If there's something that you want to talk about, let me know. If there is a concept, if there is anything, I'm going to leave that there, and we'll just see what happens. I'm going to walk away, and we'll see what happens. I don't have divergence potential. I do have a good top. I do have a 50-50 and momentum on every chart. So my rules say that I have to take that entry. I'll even drop it one tick lower because the mid-band's working down. I'll be back in a minute, guys. Talk amongst yourselves. Come on, baby. Come on, baby. Well, guys, they did not come back for us, did they?
Order canceled.
Those sons of guns. Well, wait a minute. I still have momentum, and I haven't reached the termination condition. Oh, there it is. Dag nabbit. You saved your first ever pick in the spreadsheet. Nice job, Cisco. And that's only half of it, right? Now you got to go back and study it. Now you got to go back and look at those pictures, and you got to go back and find those patterns. I love it. Good, great job. I'm telling you guys, and I say this with the utmost confidence, is, oops, I'm muted. Guys, can you hear me? Can you hear me? Were you able to hear me? Can you hear me now? Okay. Sorry. Discord's giving me fits. My microphone keeps blinking on and off. Drew, can you hear me? And guys, I want to apologize. If you ever send me a message and class is live, I don't get it until a break. I'll rarely jump ship from class to go check messages. But I want everybody to be able to hear everything. And I want you guys to be able to not miss out on anything. So if you're having challenges or something, you can always send me a message. It's just it might take me a little bit to get back to you because I typically focus on class. What do you guys want to talk about? No conservative entry, right? And Cisco, that's one of the hard things. We both knew, you and I could have sat down, had a beer, and just waited for it. We knew that was the spot. You knew exactly where that market should go, where it should bounce, where you should enter, and what the potential of it was. And those sons of guns didn't give it to you. Those sons of guns said, not today, Cisco. Not today. That's all right. They'll get another one. I think one of the important things, though, and I'm going to share this with you guys, is if you don't get your trade, don't break your rules hoping to force the next one to work. Stay solid with your rules. Guys, excuse me just 1 second. I'll be right back. Sorry, guys. My dog said, let me out. Got to listen to it. We've got about 25 minutes left, guys. I want to talk about whatever you want to talk about. So I'm just going to go through and call you out. Troy, how you doing? I know you're with me about a month now, right? How's it going? I haven't seen any pictures. It's important to me to make sure that you're good. Chris L., how we feeling? Daniel 613, world treating you right. Lenny, it's always great to see your smiling face in here. How's trading? Are you getting where you need to be? Are you getting the answers that you need? Are you finding the trades that you're hoping to find? Are you getting the reads that you want to read? Been away from the game for a hot minute? That's okay. The game just got easier to play while you were gone. So let me know how I can help you get back in. And Rob, you bought this expecting to trade and make money right away. You found out that this is a skill that would be good for years. Amen. That is one of the biggest misconceptions, guys. If you know anything about trading, like if you've done your research, what's the success rate for day traders? It's like 4%. 4% of the people that day trade are success. Why are the 4% successful? That's what you want to ask yourself. is how do I do what the top 4% do? Guys, I'm going to give you the recipe. You ready? Keys to the kingdom right now, guys. I'm giving you the golden goose. Don't turn it into fried chicken. How do I do what the 4% do? The first thing I do is I manage my risk before I ever manage my reward, guys. I make sure that I have advantages in place. I make sure that whatever trade I'm taking has been proven through study to have a statistical advantage. That I adhere 100% to that plan. That I make sure that the only trade that I'm willing to take is one that I can prove without a doubt has been proven to win more than it loses. That I only take trades that provide a statistical advantage. If you look at the most successful traders, every trade looks the same. If you look at the most successful traders, their exits look the same. Their risks make sense, guys. The more emotion that you can pull out of your trading, the more likely you are to find success. That's one of the most important things out of everything that I've ever learned from the thousands of traders that I've talked to, is that the ones with a plan are the ones that tend to find success. The ones that adhere to the plan are the ones that tend to find success. You can go back in a market, right? Guys, we can open this up and we can scroll back and we can find so many instances where rules were met, where we had a potential trade, where there was an opportunity for us to make money. Um, and that's what prop firms want. Guys, I can tell you right now, Nexgen funding, Pro trading is going to want you to be successful, is going to want you to win, because when you win, they'll win. But what happens is this was an opportunity to make some money, right? You needed that little confirmation bar, but this was an opportunity to capitalize on the market. This was a clear path, and this was momentum. And this was everything says down, and it's coming straight from areas. And guys, this is an opportunity to make money. The difference between the people that make money and the people that don't make money, it has absolutely nothing, in my experience, this is not gospel truth, it's not taking this trade that is making you rich. And let me know if this resonates with anybody. It's not taking this trade. It's not this $200 that's making you rich. It is taking this trade every time it sets up without hesitation, without conditions. The rules are met, I take the trade. That's the first important thing. This trade has a statistical advantage. I need to capitalize on this trade. And then the second half of that is not taking this trade and 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 not taking this trade. And the difference that I see more often than not in this room isn't anybody's ability to catch the best trade, because there's no doubt in my mind everybody in this room is capable and you will be confident to capitalize on these advantages. The money is made, the long term, the great P&L, the cash in the bank, cash in hand, is when you can stop giving away $1,000 on emotional, no rules trades because you're hoping and wishing and wanting and praying. And it means that if you catch this stupid little $200 trade 5 times a day, then you're up $1,000, right? Then you're up $1,000 on the day. You're not down $250 on the day. And it's eliminating trades that don't offer a statistical advantage. It's eliminating trades that revolve around fear and hope and greed. And guys, you've got to take all of these trades to learn why they didn't work. You've got to take all of these trades to understand why the edge was gone. You've got to take all of these trades, post them in the room, and ask for feedback so that we can work together to explain to you why weak triggers isn't the best trade. Why trading into a mid band with the large triggers full bar away after a bad top isn't the best trade. Why trading into a termination condition is financial suicide. And then what happens through repetition, you get to the point where you just kind of say to yourself, to hell with these. I know the right one is on the way. And I want to say that it was Muser. I want to give credit where credit is due. He said, as soon as I stopped fabricating the emotional trades, I found that the right trades showed up, or I found that the right trades materialized, or whatever the verbiage was that he used. And guys, that's the deal. There are days where I sit for hours without a trade, and I have really great days. And there's days where I try to force things, and I struggle, and I have to shut down because I hit my stop loss. And I'm human just like the rest of you. But if you really want to know how to do it, be willing to not trade. Have a willingness to do nothing. Have a willingness to sit on your hands and do absolutely nothing. But if this 50-50 trade from a good top gives me a look with absolutely no divergence,
submitted.
well, then you have to say to yourself, my KISS plan is met. And because my KISS plan is met, because my rules are met, because this offers a statistical advantage, I've got to be willing to take this trade. And I've got to take it without hesitation. And I have to understand that I may not win it. And I have to be okay with the idea that they may run me over and shoot to the moon. But if I go back and I find the same look 100 times and it says to me, Mark, this wins more than it loses, well, then I found my trade. That's why Cisco knew that 33 was his entry and was upset when 32 was as high as it got, because he knew where his advantage was because he'd done the research. So that's what everyone wants, Rob. And I go back to Moneyball. Have you guys seen the movie Moneyball? Is anybody listening to me? If you've never seen this movie, go watch it. Moneyball is one of the best descriptions of what it's like to be a day trader that I've ever seen in my life. So the premise, Cisco, is on Moneyball. Let me pull up a Word document because we're not looking at pictures, right? Nobody's got rules met, so why not just pull this up? So on Moneyball, the Oakland A's, they lost an all-star. And the all-star batted like, 365, which is amazing. You can be an all-star. That's a good one too, Chris. He batted 365 and he had like 35 home runs, right? And when they lost him, the scouts and management said, we need to replace this one-hit wonder. We need somebody that can do what he does, guys. And this guy represents $700 trades, $1,000 trades, aggressive trades, stuff like that. Well, this super smart guy that believed in statistics, he said, we don't have to replace him with an all-star. We don't have to create, that's Jonah Hill right there. So he's the super smart guy. He says, what you need is you need players that get on base. You need players that get walked a lot. You need players that specialize in singles, that hit the occasional double. And what happens is they replace this all-star home run hitter. And they do it with 3 or 4 guys that on paper seem very mediocre. On paper don't seem like they're the answer to the problem. But the reality is they all get on base. And guys, if you have 4 guys that get on base more often than they don't, well, then you've got a home run every time these 4 work together. And that's kind of what trading is like, is if you can get into the market and out of the market, collect your profits and wait for the next base hit, well, then you find yourself in a great position. But if you want everything to be a home run, if you have to hold for the biggest move every time, then it's just not like that. It's taking statistics. It's taking a statistical advantage. And guys, it's a great movie, even if you're not a baseball person. But the idea that they incorporated in this movie, they tried to hire Brad Pitt's character in for the Boston Red Sox after he did this with the Oakland A's. And he declined. He stuck with his group, but the Red Sox incorporated the exact same premise, and ultimately went on to win like multiple pennants with it. So I love this movie, guys, and it has absolutely nothing to do with day trading, but it has everything to do with the idea that you don't have to make everything a home run to be successful, right? You don't have to always get the grand slam. You don't have to make $300, $400, $500 every trade to be successful. You just have to be consistent. So here we have a 50-50 trade, and we have divergence. This does not fit the KISS plan. Period. Doesn't fit the KISS plan. But I really want it to go down,
Order filled.
right? I really want that market to go down. I really want that market to give me a winner. I know that my rules aren't met. I know that two areas aren't broken. I know that the market's been range bound. I know that it's not the right trade, but I really want it to go down, guys. I really think that I deserve a win. I really believe that I'm entitled to have this amazing victory because of my desires. But the reality is my rules aren't met. And I've forfeited my statistical advantage, and my best option as a brand new user is to not do a darn thing. All right, so Gerard, let's look at it. And I love this question. Was this a valid entry? So Gerard, we're going to go through the very simple process of the rules, okay? And I think that you'll dig this. Is the market coming from a good top or bottom? Well, a good top or bottom, not a goot. A good top or bottom is a no triggers through termination condition that reverses the market. That recipe is solid. And it is, without question, Gerard, a termination condition. None of the triggers went through, and it reversed the market. I love it. So now that I have that, what I have to do is I have to ask myself, do I have momentum? Are my smalls outside the large? Is that a good look? And absolutely, you nailed it. There's your momentum. But then I just have to go through that very simple process. I have to go through, do I have a clear path? And I have to say no, and let me show you why it's a no. And let me show you exactly why I say it's not a clear path. Because the recipe for a termination condition is that if price reaches an area and the triggers haven't broken it, this is an area that may stop the market. This is an area that may create a bounce, that may be a reversal, that may mess up my good time. Does that make sense, Gerard? And when we talk about trigger lines, there's two lines for each trigger. Two lines form the small trigger. Both lines have to be south of that line for it to even have the potential to break. So if you go back to what we looked at in the live market, when the small and the large got below, this area did in fact have the potential to break. But one of the biggest killers of this only potential to break is that divergence right there. So Gerard, let's celebrate victories real quick. Momentum is amazing, right? We're coming from a good top. You even identified the area of resistance inside of favorable large triggers. And the only thing that was going wrong with that trade is that we didn't have a clear path. And I want you to see what the market did. It pushed right past your potential entry. It pushed beyond the window of opportunity and probably stopped you out. So this is where that simple rule, that simple plan for the brand new user helps eliminate the problem trades, the maybe trades, the hope trades. The small triggers are also tucked inside of the large here. So not only is divergence a loss of momentum, but so is that weakened trigger look, right? So now I have no clear path, and I'm also seeing my small chart starting to slow things down on me. Does that make sense? So day 1, day 2, day 3, I want you to ask me all day long, is that a good entry? Because I love everything about what you saw. And then this simple lesson, and this is why this classroom works so well. This simple lesson on termination conditions, it helps buy you some patience. It helps take a little bit of the hope out of it. And then when you grow a little bit, you might say, I still like this look. Let me wait for a confirmation bar. Let me wait for a reversal bar, because I am coming from a good top, because I do have odds favorable momentum, because it is one divergence, and now my risk is established, and it kept me from jumping in early. And I can identify my first trouble spot, which is that area that's not broken, and it's only 60 bucks, but with this level of momentum, maybe I can hit that 60 bucks. And if this divergence becomes true, it's an exit condition, which lets me reduce my risk even more. So now we're in a medium probability trade. It's already had some problems, but I waited for confirmation, and I've got a very definite plan. If a second divergence prints, I'll exit for a loss. If the second divergence doesn't print, I'll get out at the first trouble area, and then I'll crash my chart because I'm drawing too much on it. I've got too many resources pulling. So we'll give it a second. We'll get back to it, and we'll see what happens. But are you following the logic so far, Gerard? In the beginning, it's an absolute no because the plan's not met, right? In the beginning, it's a hell no, don't do it. Your KISS plan says no. As you grow with the software, what you may find is that you'll make adjustments to your plan, that you'll make adjustments to where you are willing to fudge your rules a little bit. Awesome, cool. And oh my gosh, I'm killing myself here. I got too much stuff going on. So thank you for putting that. And I'm telling you right now, and I'm telling everybody in this room, that if you really want to get to where you want to be, do what Gerard just did. Start with posting pictures of puppies in the room. And then once you've done that and you feel comfortable, just tell me what you see and tell me if you think it's an entry, and we'll talk about it. And we'll decide together through annotation, through rules, through advantages, whether or not there was a reason to take that trade. And let's see if this will come back up. Hopefully it will. And I like it when we can do this together in the room, guys. And I like it even more when we can break rules together and see what happens, or when we can follow rules together and see what happens. And I'm on Simulator, guys. And Simulator is designed to do nothing more than let you practice, right? And so far, it looks like things are going okay, waiting for the confirmation. It looks like it hit our first target, but maybe didn't fill us. We'll see when it comes up. Look at that, man. It hit the target, and it didn't fill us. And we're still loading up. Oh, look at that. It did fill us. So waiting for confirmation when it wasn't perfect wasn't a bad idea. Going to break even when I hit the trouble spot's not a bad idea. And let's see if momentum carries us down to the next fib. What do you guys say? Guys, this is live, so this isn't anything that I can make up. This is 100% in the moment. And to be honest with you, this is exactly what my plan would look like. And now we're into a trouble spot again, and I'm going to say to myself, if I get another divergence on a 50-50, I'm out. But it doesn't matter, because all that momentum just carried me to my target. 50-50, right, Josh? So let's go through the entire read. And Gerard, you are a freaking rock star for posting that in the room. Let's go through the entire read. Cisco, will you do me a favor, man? Will you post the screencast link because Discord's not letting me pull up your picture? So let's do the KISS plan on this one. Josh, you want to walk through it together with me? Cool. Bum, bum, bum. Let me make that a little smaller. And let me take a picture of the KISS plan. And I'm going to show you guys the progression, how this is going to work in your life, guys. So here's my rules. They're on my chart. If you have Snagit, you can do this. If you have Capture, you can't. So let's start with, I don't know, at the beginning, right? Josh, do I have a good top, a termination that creates a reversal? Absolutely. Do I have odds favorable momentum? Absolutely. Smalls are barely, but they are. Absolutely. And then we get into this one. So this is why I said, guys, if this is your KISS plan and you're following it, this wasn't your trade. If you thought that you would break your rules and you got in at the area of resistance inside of favorable large triggers, even though the rules aren't met, you probably still got stopped out of this trade. Did anybody take it and get stopped out 4 to 5 ticks beyond the window of opportunity? It's okay if you did, guys. Because of the divergence. So as you grow with the software a little bit, Josh, as you become more comfortable with what you're seeing, as you begin to recognize the idea that a strong top like escalates the kickassery tenfold, that a strong top, man, okay, it's giving me problems too. I'll do a little reboot. We'll come back to it, Cisco, but it looks like you took the exact same trade and you took it the exact same way. The strong top won't necessarily spread the triggers more, but what does a strong top mean? A strong top means that a decision to go down was made by the sellers right at a key area. And then if you remember, Cisco said, and look at that, there's a lower divergence right off of it too, and that's key. So this is beautiful. And then once I get this, I'm still looking for rules, right? I'm still looking for momentum. I'm still hoping for a clear path, all that good stuff. No. I'm gonna say no, maybe because I don't understand completely. Momentum is just one piece of the puzzle, Josh. Momentum is only one factor. And we know that it's not a clear path. And this is the key right here. This is the key to understanding how to take a 50-50, is accepting that it's no longer high probability, accepting the idea that it's no longer the best of the best. Does that make sense? So let's back up and let's start with that. The first thing before I do anything, ladies and gentlemen, is when my chart read says this area is not broken, I instantly, automatically, and without question have to say to myself, this is not a high probability trend trade. So I'm going to start stacking advantages. So I'm going to start asking myself these very key questions. Do I have a good top? Guys, that's bonus number 1. Do I have odds favorable momentum? That's bonus number 2. Did my small triggers smash through the area? That's number 3. This on this chart to me says, hell yeah, let's look for an entry. And on my entry, I have to say to myself, well, since I don't have a clear path, I want to insist on momentum. And that's why the KISS plan says don't take this trade with divergence. So that's it right there. When you start becoming a chart reader, guys, when you begin to recognize and understand the idea that a termination that reverses the market, that gets you into this position, creates an advantage if you put this condition up against this condition and you sent them running head first at each other, guys, this one is going to win more often than that one divergence is going to keep you out. This divergence gets the gold ribbon, right? This good top, that's the one. And this down here, is nothing more than one little challenge when everything else is just amazing. And what you'll find is you may say to yourself, I'm willing to take this trade. But you may also say to yourself that it's not a perfect trade. Let me wait for confirmation. Let me wait for a down bar. Let me wait for something that says, hey, we are going through. And if you never get the down bar, you don't take the loser. And if you do get the down bar, you can manage aggressively. And this one worked out beautifully to get us down to the area. And then look at that. Once we hit the area, we're back into a termination condition, right, Gerard? Which means that I didn't go short here, and no matter what happens, that's not my trade so much, because this says we've reached our target. We went to where the market is likely to go. There's no reason to take a trade into that area, but with the potential and the momentum, I might be able to capitalize, and that's kind of the second page of the book that we're all writing as traders. Great stuff, and I love it when we can do it live, and I love it when you can see it live, and I love that you can hear me talking about